Let me make sure everybody gets in. Hey guys, can you go off your Wi-Fi's and stuff on your phones? We're already experiencing network difficulties. All right, all right. How's everybody doing? Good, good, good. Ross, what's going on? Marco Toledo, where have you been lately, buddy? You, my friend, owe me a phone call and an email. Maybe multiple. It has been way too long. Aman, how you doing, sir? Hassan, what's going on? Aaron Huber, how you doing? Anthony from Staten Island, baby, what's going on? Stephen Tucker, what's going on? Mark DeVasta, what's going on? Oh yeah, Staten Island's like Jersey Shore, but just not in Jersey. I've been through there. Hey guys, give me 2 minutes, man. Give me 2 minutes. Make sure everybody gets in. As you know, when you get a webinar, stuff like that, there's always a couple people with technical difficulty. Saeed, you there?
Yeah, I'm here. Thanks everyone for coming. And yeah, I'm here.
Hey guys, so Saeed is like James Bond. He's the he's like James Bond from Bangladesh, and so he doesn't show his face. But if you ask him nicely, he might. But most of the time, you'll just hear him on the audio. Saeed, say hello to everybody.
Hi everyone. Thanks for joining us.
All right, guys, give me 2 minutes here, and then we're gonna get this party started.
What is that you're drinking, Carl?
Coffee?
Sure.
Yeah.
That's all they all say.
Well, in the old days, I would actually have the beer in my hand. I wouldn't even hide it.
Yeah, I've seen those days.
Oh yeah, oh yeah, oh yeah. Hey guys, no, we don't have like a group chat for everybody. I mean, there's gonna be 1,000, there's 1,500 people registered for this webinar. I can only imagine the nasty things you guys all end up saying to each other in one big group chat. I'll answer everybody's questions at the end. It will take quite some time, so you know, at the end of the presentation, the webinar, just be patient. You know, one of the things that almost everybody will say in the webinar, like, there'll always be some guy, he'll always be Indian guy. He'd be like somebody with the same last name as me and be like, "Are you seeing my question?" And it's like, "Yes, I am." "Did you see my question?" "Yes, I did." "Did you see my question?" "Yes, I did." And this will go on for like an hour, but because I just answer them in the order they come in, and he asked one, you know, an hour after everybody else, it takes a while to get through it. But for most of the time, it's not a big deal. But it happens to be, it's always one of my people that end up causing that type of trouble. All right, let's get this thing started. I think everybody's here. All right, rock and roll. Y'all ready to have some fun? All right, let's get this thing going. So, guys, welcome. I thank everybody for coming in here and coming in for this webinar. So, what I wanted to talk about today with Saeed, who is my brother from another mother, but also like my dad. He's like my old great uncle, who's actually kind of taught me some of this stuff. What we want to talk about is strategies for how we trade the market open, okay? So there are 3 stages to the market. You know, you have the open, the middle of the day, and the end of the day. Traditionally, a lot of traders will stay away from the first 30 minutes. You'll actually hear some professional traders say, "Hey, I don't trade the first 30 minutes of the market because I want to see where everything settles." And that was always a misnomer. Like, I was always wild at the open, and so is Saeed. And it was always a misnomer. Me and Saeed used to talk about all the time, like, Why would you wait for something to settle? Because once something settles, it doesn't move, right? And so, we wanted to trade the open, but the problem is that the open is so volatile. The open is so unpredictable if you don't know what's happening. And your traditional technical analysis setups of flag patterns and XYZ patterns and this patterns, well, they don't show up right at the open because guess what? It's the open, right? It's the first 30 minutes to 1 hour of the stock market. So the traditional patterns that you would be trading, they're not there. Like, you can't see them yet because, hey, guess what? It's the first 10 minutes of the day or the first 15 minutes of the day. I mean, you'll see, like me and Saeed, by the time the market opens and it's like the first 15 minutes, I mean, we're always up like a couple $1,000. Like, it's always like, boom, 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 boom. Within minutes, we're already starting to enter things depending on the setups. And so understanding how to trade the open is really, really important because that is where the most volatility is in the trading day. But it is also the hardest to control, and especially for new and developing traders, the one that can cause the most losses if it's uncontrolled, if it's without, a proper setup and pattern. So there are 3 stages to the market, okay? You have the open, the middle, and the close. So the open is about price discovery. It's about price discovery. At the open, price can go anywhere. Stock has news, stock has earnings, PR. It can go literally anywhere because nothing has been digested yet. It is literally just prices discovering where it needs to get to. So you have these big volatility spikes. The middle of the day is about price consolidation and price retracement, meaning stocks either pull back or they consolidate, but you don't have as much action. But if you try to do the setup or the pattern that you would do in the first, say, 30 minutes, and you try to do it in the middle of the day, you won't get the results that you're looking for because the middle of the day is about price retracement and consolidation. So how you would trade it is completely different than what you would do in the first 30 minutes to an hour where you have explosive moves. Your tactics and strategies are very different. And then at the close, which is once lunch ends, so like 1 p.m. to close, that is when a stock will choose a side. Is it going to break out or is it going to roll back over? So the setups that are involved that time of day are also different. So you have the open where you do certain things. Then you have the middle of the day where you do certain things. And then you have the end of the day, which will also require its own setups. And so, and I also can comment on this. When a lot of traders, they screw up, and they're like, like we have a lot of students, and they have great risk management, and they have like, they're good with managing their risk and their positions and all this stuff. But they like have sometimes when they're having trouble getting over the hump, it's often because they don't have the alignment in their trades. If they're trying to do something at the close that you would do at the open, like you're trying to do a 9 EMA pullback, which is something we'll talk about. Well, that's a strategy we use like in the first 30 to 60 minutes. You don't do it like in the middle of the day. And so if you do it, it's a loss. And Saeed was actually the one that kept taught me a couple of these bad boys. So what we want to talk about today is a few different setups that I use strictly for the open, okay? Which is the opening range breakout, the 1, 2, 3 pattern, and the quick pullback trade. So I got 3 setups for you that you want to learn. And one of the things about trading is, in trading, you only have to be good at a few things. You have to have mastery over just a few different things. What happens is, if you're trying to be like a generalist and you're trying to learn everything, you're not going to make money. If you can master a few things, you can actually go out and make money every day. Saeed has known me since like 2008. Saeed, where do I make all my money?
Uh, I think we've known each other for about 7 years now, right?
Yep.
Yeah, and then we've been trading together for almost 4 years. Basically, we are on GTED every morning, I mean, yelling at each other, high-fiving each other, trading together, and finding the setups. Um, and, I've been trading for over 17 years now, and after all these years, I have come up with certain ways. I've read hundreds of books, I've seen hundreds of gurus, and then I came up with few setups, few low risk, high reward setup for open or during the day, as a matter of fact, that works for me. And these are not, the risk is very low, even at the open. I mean, you just can't chase stock just because they're running. You can just short stock because they're up so much. You can buy stock there just because they're up so much. So there are certain type of patterns that you need to follow, and these are some of those patterns that we're going to talk about today.
Good. Saeed, I mean, as we've been trading together for a long time, we have like a certain pattern in our trading where, I mean, a majority of our money, both of ours, is always made pretty much in the first 30, 40 minutes when we're hot. And it's like the middle of the day where we kind of give it back. And then it's like the end of the day where we kind of get back to where we were or above.
It's always like by 10:30 you'll be like, close up like $4,000, I mean, I'm like, yeah, let's go. We're done for the day. And then we do all these little lazy trades here and there, and then we'll lose a few hundreds here and there. And it's always the worst, the middle of the day, basically. It's like all these patterns are setting up, it doesn't really go anywhere, or you work for a few cents, and because everybody's watching the same pattern. That's what I'm trying to say, All the traders, all the swing traders are watching the same pattern, all the hedge funds are watching the same pattern, all your other traders are watching the same pattern. So when everybody watches the same thing, it doesn't really work, As you see on Twitter, when everybody's talking about the same stock, you'll see will fail, It's basically the curse of too many eyes,
So, guys, and the reason for that is this. Happens to me and Saeed all the time. We talk about this every day at 10:30 for probably the last 2 months. And the summer season's over, so I try not to take as many half days. But for the last 2 months, Saeed every day comes to me and goes at 10:30. He's like, "Should we go home?" And I'm like, "No, I don't know. Like, let's see what we can do." And the reason is we make always good money at the open, and in the middle of the day, what happens is people tend to give it back. And there's two different reasons for it. One is that the strategies that you use for the open and for momentum trading and trend trading won't work in the middle of the day, even when you really want them to, and even when you know they won't work. And the other part is just psychological, of that as a trader, you as a trader will only get so many good decisions in a row before you need to take a break and recharge. Like no trader I've ever seen will make 10 good decisions in a row, right? You have like a limit of 4 or 5, and then if you don't leave or take a break or relax for a bit, what happens is it is just a statistical probability. You're not going to be on top of your game as much when you're up $3,000-4,000. You don't have that same tenacity, so you lose once. And then when you lose once, guess what happens? You have to take another trade to get back to where you were. Then you lose a second time. And then you have to take another 2 trades to get back to where you were. And so you start this endless spin cycle of despair in that middle of the day, trying to get back to where you were, saying, oh my gosh, I am not a greedy, gluttonous bastard. I'm going to quit trading. I just got to get back to where I was. And so that's the type of thing that happens even to professional traders. And so what you do at the open is very, very important. So let's talk about.
But let me just say one thing. I'm not saying that trade in the middle of the day is not going to work. I mean, definitely they'll work, but there will be more shakeouts. There will be, your stops needs to be loose. Whereas, since there are too much volatility at open, the profit tend to come fast because, as they always say, open is a wild, wild west basically. So it's more volatile. If you play the right pattern, your profit will be quick. The trade will be quick. I mean, don't get us wrong that, just because it's the middle of the day, the trade is not going to work. Of course, it will work, but there will be more shake-up and, you need to make loose stuff and such.
And you got to do different patterns. So like at the open, we often, and we're going to learn this in a hot second, we trade a lot of 9 EMA pullback trades. But that pattern doesn't work in the middle of the day. You need a 20 EMA or a VWAP type pullback, a much deeper pullback. But because you're impatient a little bit, right, you don't want to wait for it. So then you preempt it. And so that's where, the mismanagement comes in, is that you've got to wait in the middle of the day for much deeper pullbacks to get into stocks. And we'll talk about it a little bit. So a couple things that I do. Number one, scanning. So like talking about who we are as traders, me and Saeed, we're momentum traders. I think that's probably the best way to talk about it, is that we trade, it's not even necessarily we're trend traders, we're momentum traders. We will trade anything that moves. And the reason for that is just really simple, is that, we want to make money. I mean, that's the gist of it, is that we want to make as much money as we can in the quickest amount of time. So what that means is that we have to find the best moving stocks, the hottest stocks at all times, irregardless of situations. And so that's what me and Saeed do, is that we're always looking for the hottest stocks. So Saeed, can you give me a rundown before I go into mine? Like what is like your kind of pre-market routine before the open, like the first 30 minutes before the open?
I always go with, my personal watch list. These are I post on the blog. These have daily setups. So those are some of, I already, post. I always, every other day I put on a blog on Boston Wall Street site. So I'll have those them in hand. And then I'll go with the flavor of the day, basically. These are the gappers that has earning or news, or they're running pre-market for some catalyst. And I'll basically want to see a clean chart. As in the slide you have, you want to see stock that have history of making big moves, rather small float, clean daily chart. And then you wait for a setup, basically. These are your go-to stock, beside, your daily watch list, because these stocks that are running with news, you cannot see the move coming, I mean, they're running because there's a news that came out that particular day, or there's an earning that came out that particular day. So these are, you have to run a pre-market scan for that. And there are tools, there are various free tools that you can find that gives you all the pre-market gappers. Kunal is one of those sites. What is that site, Kunal? I mean, you have the.
So, folks, like essentially, what we're looking for is stocks that are going to do explosive moves. So one of the things that we both scan for every single day is stocks with catalysts, like Saeed was saying, stocks with catalysts. Stocks that have some type of PR news out or earnings. And the reason for that is this. We are technical traders. We trade price action and momentum, and then we use price patterns to figure out where and when we want to buy stock. But as technical traders, if we can get into stocks that have some type of news out where they have great earnings or they have a great PR, they got something hot going on, okay? Well, what happens with that type of trade, that type of stock, is if you can marry a stock that has some type of PR earnings out that's amazing, and it's gapping up the stock, and you can marry it with the technical patterns that we know, now you have a super combo, because you are marrying both sides of essentially stock market analysis, the fundamentals and technicals. And even though we're not reading the fundamentals because we don't care, the gap tells us that there was some type of news out, and that's what matters. And so in the morning, what we're doing is we're scanning for gappers. And so what a gapper means is a stock that, say a stock closed at 12 and it opened up at 13 the next day. It's gapping up, meaning that something happened at night or in the morning that is causing it to open much higher than it was the previous day. And so what that gap tells you is that there's some type of news out. So in the morning, I want to scan for gappers. I want to scan for stocks that are gapping up 3% or more with some volume. And so then once that happens, I'm looking for a few things. So I use a software called Trade Ideas, to look for mine. So, I got like a little tradeIdeas.com. These guys are great. So I've got like a pre-market scan that I do, that I've made for, myself. So, So I got a pre-market scan of basically, let's see, stocks that have pre-market earnings out that are moving pre-market, okay? And so, I'll go through the list, and it's not pre-market right now, so nothing will pop up. But I'll go through the list, and I'll start to see what's going on. If you don't have something like a Trade Ideas or some type of software filter, a free website that you can use is the stockmarketwatch.com. So the stockmarketwatch.com, if you hit pre-market on there, what you will see is a bunch of pre-market movers, okay? So from there, you'll start to see some stock that have some type of earnings. So what you're seeing here is like Away, Gene, ADAP, SEDG, FEYE, LCI, Blue, all of these different type of companies that are showing some type of movement pre-market due to news. So that's great. So from this list, I want to curate and narrow down the best tickers. And so we want to have, like me and Saeed, we want to have maybe max 5, but usually just 2 or 3 that we really, really like so we can focus on them. So there's a few different things that we're looking for. Number 1 is a history of making big moves, right? And the reason for that is very simple. Like, say you were looking and you saw Bank of America gapping or something. Well, Bank of America, like if you look at a chart, it never moves, right? The biggest moves Bank of America ever does is like 30, 40 cents, 50 cents, maybe $1. Like if you're really, really lucky. If GE...
Any bank that matters. Basically, banks are out. I mean, I don't even look at them.
Banks are out. So banks are always out, retail is always out, and REITs are always out. Those are the 3. And gold and silver. There's a lot that are out. We'll go into that hot second. GE, if this gaps up or does something, do you really want to be involved in this? What do you notice about this stock? It moves very little. See these candles? This thing doesn't move at all. So think about this. Like if you're looking at, because the float on this is so high, so it just doesn't move that much. So when GE looks like it makes this monster move, it's 30 cents. Well, like if you look at another stock, like say we trade this VRX a lot. So like if you see VRX and it makes the same type of move as GE, like on the chart, well, that's $10. So like what one looks like just a few cents, the other one will be dollars. And the reason for that is that, these type of stocks like General Electric don't have a history of making big moves. And the reason why is that the float is too big. So I say, what is the definition of float for you?
You're the master in that. I mean, anything less than 5 million shares is a good float.
So for float, like for those of you new guys that are coming in here, float is essentially the number of outstanding shares of a stock that can be traded on the market. For example, like you can't have 5 billion people buy 1,000 shares of a stock, right? Because where would the shares come from? There's not that much. Every stock has its own supply, which is essentially determined by the company, right? How many shares they want available. So that float is the number of shares outstanding on a stock. So, like, one of the easiest ways to check the float is you can go to like a place like Yahoo Finance, right? So you can go to Yahoo Finance, and one of the things you'll see is like, what are some of like the biggest movers we've ever seen? The AQXP, for example. So like AQXP is a stock that we were trading just a couple months ago, if I remember correctly, summertime, end of summer. And what do you notice on this stock? This is a stock that was at $1.76 and ended up at $50, $57 in 2 days. Think about that. $1 to $57. Well, why is that? Was it because the news was so good? Well, no, because look, once the news came out, right, it ended up all the way back down to 14 bucks, where it's kind of settled in. So that's its kind of equilibrium. So how did it go from 1 to 50? Because the float is so low. See, the float on this is 5.4 million shares. So, like, you see a stock, especially if it's a biotech stock, and it has news out. And so if you go on Yahoo Finance, you put in a ticker, you hit key statistics, what you'll see here is float. So you'll see a number there. And so anything less than 100 million shares, to me, is a low float stock. There's different levels of low float, but anything under 100 million is a low float stock. That's a stock that can move in a very, very rowdy way. And the reason is there's a limited amount of shares. So like say this AQXP is like, say it's got 3 million shares in float. Now say a PR goes out on this stock. Say a PR goes out on stock. This is a biotech stock. It's got this great PR. And it says, this biotech stock is going to pass all these things and it's going to solve cancer. Now whether they're going to or not doesn't matter. But they say it. Because when you have a float that's so small, what's going to happen is if 1,000 people read that article and say 1,000 people say, I want 3,000 shares because it's only $1 stock. Right? It's only $1 stock. Why can't 1,000 people say they want 3,000 shares, 5,000 shares? Well, how many shares is that? It's 5 million shares. Now, think about it like this. Say the PR comes out and the stock is at $2. Can 5 million shares be bought at $2, guys? No, because for a trade to be taken, you have to have a seller for a buyer. So say somebody wants to buy 10,000 shares at $2. Well, just because you want it doesn't mean it's going to happen. Somebody has to be willing to sell you shares at $2. That may not be the case. Maybe there's only 200 shares at $2. And maybe there's 500 shares at 202, and 2,000 at 205, and 1,000 at 210. So what happens is, right, because, and imagine you're like an owner of this stock and you're pretty smart, and you've read the PR, and you're thinking, man, I'm not even going to sell this thing till 10 bucks. So then your shares are out. And say there's a bunch of people like you whose shares they're out. They're out of the picture till the price gets really, really high. So the immediate term time frame, there's only a handful of people that are willing to sell, but everybody wants to buy. So how do you get your shares? You compete over the next person and the next person and the next person and the next person and the next person to get your shares. And so that's how stocks go crazy to the upside, because there's only so many shares and everybody wants it. And so that's where you get the momentum. Now, this is the thing. Like, everybody thinks that low price stocks means, or low flow stocks means low price stocks. And that's not the case. If you think of like all the stocks like that we all trade, like Tesla. We trade Tesla a lot. Tesla is a low float stock. It's only 100 million share float. So it's a low float stock. It moves in exaggerated manners. You could see, like, it can be at $190 and then at $290 in a month. So Tesla is a low float stock. A lot of the biotech stocks that we trade, low float stocks. So when you think about like some of the biggest moving stocks that you've ever seen, see this like price line. So if you look at like a chart of like price line, this thing has been trending for years. See, this thing says 2007. What do you see? This thing was $30. It had this one dip here in 2008. Since then, it's just up, and away. So look at the float on this bad boy. 51 million shares. Now, I know a lot of people say, well, I would never buy $1,000 stock. It doesn't really matter. If you bought 10 shares or 5 shares or whatever of this stock, and it goes up $500, guess what? You made a lot of money. The price really is irrelevant. But what I'm trying to show you is that a low float stock doesn't have to be low priced. We've traded, me and Said, we trade all the biotech stocks that we trade are all low floats. Said, what are some of the big moving biotech stocks that we trade?
Yeah, I mean, like Sam, Exxon, what else? Juno, Kai, these are all kind of low float, That's they get the big move. They have big range.
So Said is like the master of some of these stocks. So he trades like this Exxon stock all the time. So this is a very low float stock. It's 46 million shares. So like one of the things that you see about Exxon is when it goes, like it really goes. This thing was at $15 in, last October, and it just went on this epic run to $60. I mean, because it's a fairly low float stock, and low float goes both ways. When it finally tops out, it goes back the other way. But this is the thing. Look at the moves in this thing. A few days ago it's at $30, and then it hits $42 in 5 days. That's what the low float does. Is that float gives you the opportunity to make big moves. And then of course, really the biggest thing I think when we're intraday scanning for some of these breakouts is clean daily charts. I think the number one reason that a lot of traders are in the wrong stocks is that they're so focused on the intraday action that they forget the big picture. So the big picture, meaning your daily charts, what's happening over the course of months to the whole year, that big picture influences the most influence on a stock. And so when you're looking at a stock, you're looking at your little charts, like your intraday charts, and you're watching something move up or down 10 cents. That means nothing in the scheme of really what's happening in a stock. A stock is like a person. Like what you do today, sure, is just your day, right? But it doesn't tell your life story of where you're going to go and what you're going to be about. And that's how stocks are. Just because something's moving up or down 15, 20 cents on an intraday chart doesn't make it necessarily anything, right? The longer term picture tells you exactly where the action is. And so we want clean daily charts. So like if you look, one of the things when we're looking at gappers is, you never want to look and get a gapper when the chart sucks. So like if you see like when we're doing these gappers, let me think of some stocks that we did not trade. So for example, Said, Fit, yes, we were trying to short. I was thinking about shorting Fit the other day, and I did short it, and it didn't work. Said, do you remember why it doesn't work? So I tried to short this thing. So this stock had bad earnings out a few days ago. So this day. So stock has bad earnings. So you can see this gap down, right? So this gap down, it doesn't have any follow through. But we shouldn't even have it on our list. And the reason why is it just gaps down back into this huge level of support. See this range over here is support. It's not a clean breakdown. So if it's not clean, there's no point of actually taking it, because what happens on your intraday patterns means nothing. Because what's showing on the daily is that, hey, this stock is just gapping down into support. So you don't have alignment on multiple time frames. The key to everything that we do is, if you're going to be a day trader or a short-term trader, is aligning it on multiple time frames. Does what you see on an intraday basis align with what the big picture is telling you? Because if your big picture is telling you that this stock is a big piece of crap and it can't go down or it can't go up, then why, no matter how good the pattern is intraday, do you want to be in it? Doesn't matter. And then, our nightly scanning is just really easy. We look at a go-to stock list. Saeed's just like me. I think I probably even got this from him. We have like a list of stocks that are trending and that are in play for the last, say years, months. And we scan through them every day. Like mine is like 170 stocks. And Saeed's is probably somewhat similar. But it's literally...
Mine is 500 or 500.
500?
Yeah.
Okay, so you had to years for a while.
But you know what, Kunal, I was going to say, now that you brought up fit chart, bring up FI chart. Now you see what we talk about when you say clean,
FEYE?
Yeah. Today it gapped down, right?
Yeah.
Okay.
So this is clean.
See that chart? As of yesterday, everybody's hoping for a breakout on that stock. It's been out for 3 days. And of course, the news comes in and it gaps down. Now, there are a lot of holders, there are a lot of bag holders on this stock. So this is the type of stock you want to pay attention to when you're, playing short on gap down stock. And that will, Kunal is going to talk about ORB next. So I'm going to give you a segue how to trade this type of setup.
So this is what we're looking for. See how there's no airspace below. Like when a stock gaps, what we mean by clean is if it gaps into some junk, it's not clean. If it's free, then there's airspace. And airspace is necessary for making clean moves. And then the other stock scan that I run at night is just woo. My apologies. 4% breakout. So every day there's a handful of stocks, maybe 40, 50 stocks that are really showing explosive moves with the proper amount of volume. So I want to run a scan for that. And then I'm just really, flipping through the main list that I have. And there's, a few different intricacies that we'll make caveats to when the market changes, so that we can add in some variation. But a majority of the days in bull markets, this is pretty much what we do. We scan for earnings, we do 4% breakouts, we look through our regular list, and we got ourselves more than enough trades. And the reason why, guys, think about this, we get so many emails of what scans do I run? I need all this technology. And then I ask them, I'm like, well, are you trading 30, 40 million dollars? Why do you need 30, 40 ideas every day? No, I'm trading about $2,000. Okay, so you're trading $2,000. Why do you need 20 ideas? Why not do your scans and take the 2 or 3 best ideas, right? Because as retail traders, really our advantage is that we only need a couple good plays to really have a good day. Saeed, when we have our best days, a lot of times it's really we have a lot of $200, $300, $500 gains, and there's one awesome one when we finally catch the right one. You don't have to have 100 tickers. So, opening range breakout. And guys, let me just go back before we talk about clean. So when I was talking about like gappers that are not clean, so this is like Coop. You guys see this thing? So Coop, like this is a stock that was on its dead bottom. You see that over here? So see this thing? It gaps up right into its 50-day moving average. Right into its 50-day moving average. So if that's the case, that it just gaps up right into its 50-day moving average, do I want to play this for something to the upside? No, because it's not clean. All it's going to do is it's going to pop up, and it's going to hit into resistance, and it's going to come back down, right? It's going to come back down. And so that's not a clean breakout for us. That's something that we tend to stay away from. So when we're looking for gappers, we're looking for clean moves. So what's an opening range breakout? An opening range breakout is a day trading setup that gets you into strong momentum stocks early in the move. Early in the move. So what are the key characteristics of this? Number one, you want to look for a gap. So you go in the stock market watch, you look for a gap, some type of upwards or downwards movement. It doesn't have to just be the upward. Remember that we go long stocks, meaning that we want them to go up. We also short stocks, meaning that we want them to go down. You can make money on them both ways. Second thing, buy in the break of the consolidation range. So at the open, what you're looking for is a short-term consolidation range. So we look for 3 5-minute candles, essentially, for a consolidation range. Every blue moon you may add a little bit, but a majority of the time, you're looking for 3 candles to form some type of consolidation, a flag, triangle-y thingy. They're all called flag. This is best within the first 30 minutes of the trading. So what you're looking for is something like this. See, this is SPN. This is a stock that's been in a downtrend, consolidated for some time, and then had a breakdown. See this? A gap. You see the gap on the intraday chart. And for those of you guys that are new and you're not familiar with what we do, email me, canal@bullsonwallstreet.com. If all of this is voodoo to you, I'll send you some really beginner courses, 10 hours worth of this kind of stuff. And I'll send you some beginner courses so you can get the lingo down, and then you can rewatch this one. So canal@bullsonwallstreet.com. So you got the gap here, and you got a gap here. So what we're looking for is 3 or more consolidation candles. So you see this bad boy, gaps down. You got 1, 2, 3. So you got a range right here. See that thing? And you got a line in the sand. So you know where you can manage your risk, which is above these candles right here. That's your line in the sand. You get your 9 EMA. And you can short this bad boy right here. So your risk is only 25 cents. Very, very small for a stock that's moving a lot. Short, stop loss, let it ride. That is the gist of kind of that type of setup. So this is a stock that we actually just did, me and Saeed just did the other day. So lock is, hold on, let me bring it up on my own charts. So lock has kind of the perfect storm of what me and Saeed like. So this stock at the time was just, it was sitting on this dead bottom. See this? Like, it had been really just consolidating here for, I don't know, since summertime. Okay? So then it has earnings up. So then it does what? It gaps up. So that day you can see it gaps right over the 200-day moving average, which is really, really important because say the gap tried to fade, the fact that it's over its 200-day moving average means that there's a level of support there that's going to hold up the stock. So the first dip, if it does dip, it's going to get bought up. So in essence, what we're looking to do is there's a few different plays we can do, but the number one that we're looking for is opening range breakout. Once it gaps up, will it consolidate for 3 candles or more? You know, I remember this one because he was really nervous about this thing. He was scared. Weren't you, Saeed?
Yeah, I mean, but the only good thing about it is that it gapped over the 200 MA. 200 MA is like the mother of all moving averages. Now, in a stock that is in a downtrend and it actually gaps over the 200 MA, that shows power. You know, that means that stock has serious ammo. You know, I mean, there are buyers out there, they would love to have it. I mean, the news is so big, or whatever it was, whether it was earning or news, whatever it is, that shows conviction. You know, I mean, normally you'll see if there's no conviction, you'll see basically it'll gap up and then fade at 200 MA, but that it actually gapped over 200 MA and then put in a low, hold that 200 MA, that shows something. That shows power. You know?
This thing was hot. So the other thing that we like about this stock is, well, number one, the float is only 80 million shares. It's a low float stock. Right. So we know that it can move. It's breaking over multiple levels of resistance. You've got this base here, the price resistance. You got the 200-day moving average. This is a surefire, like, clean breakout. And I like that. And then the biggest thing is just this. Can you wait? Can you patiently wait? Anytime you're buying the first candle, can you wait for a few minutes? Anytime I ever buy in the first candle of this type of gapper, I lose. Saeed always tells me when I do it, he's like, dude, you couldn't wait 10 minutes? And I'm like, no. Right? Even after this, so many years, so much of your trading is about just the discipline of following your own rules. Now, the good thing is this, and that's what the best part I love about being traders. You can break almost half your rules and still make money.
And Gene, for example, today, I mean, you know.
You break the rules. Sometimes you break the rules because you lose focus. But if you could just stick to it most of the time, you have to be perfect all the time. You can just be perfect half the time. You can make a lot of money trading. I screw up every day. I mean, so I have to tell you, there's probably in our chat room, there's nobody that makes more money than me, but nobody else screws up more than me. I mean, it's like a daily thing. We giggle about it all the time. It's like, dude, you chase that. I'm like, I know. Dude, you have too much size in it. I'm like, I know. Dude, that's not a short, it's a long. I'm like, I know. Like every day, it's like something where he's lecturing me on where I screw up. But the thing is, I had that big screw up, but I always, when I'm right, I'm right. And so then I can make a good amount of money. So like a stock like this is like my bread and butter, you know, where I'm going to go in a good size because I'm seeing everything line up on the daily chart. And then, guess what happens? I get the perfect ORB. 1, 2, 3 candle. I bought it 1333. 5,000 shares. Stop right under. And then it's just boom, 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 boom. We took like a cool, $3,000 on this thing that day. I mean, it was wicked. You can see, like, look at all these green candles. I mean, I had no reason to even sell this thing till it started to roll over. I mean, it was just an easy-go-lucky trade. That's how you want your ORBs to look.
Yeah, I keep on saying, Kunal, why do we sell it? There's not even a single red candle. I mean, what do you do with this thing? Yeah, that is right. I mean, that was amazing.
VBLT. So this is a biotech stock. It's a $7 stock. Gaps up to $9. Now look what happens here. 1, 2, 3, 4. So this is like the first 20 minutes a day, you've got this range. So when you take out the range, you get these type of pushes, and you're scaling out along the way. Now, a lot of you guys want to marry these stocks, but this is the thing. The reason it's called opening range breakout is because it is used for the open. These are not the entries that you take for long-term positions. That's a whole different ballgame and a very different ballgame. These are entries that you take for quick gains, $1,000, $2,000, $3,000 or whatever. Like, you know, when I trade something like this, I mean, normally it'd be anywhere from 2 to 10,000 shares, right? So, you know, I'm not going too crazy in it. A lot of times it's 1,000 shares, you know, but it's meant for the open. And so we're selling these things into the spike and then letting them ride till they start turning over. And then we wait for our midday setups, and then we can get back into it. That's how day trading is. Once the open is over, you wait, and then you come back for your midday setups, which means you're waiting for a deeper pullback, right? Deeper pullback, and then end of day, you have a different type of setup. But in the open, it's just this quick consolidation, power, spike. Now, guys, it goes to the downside too. This is Tesla. So it's at 270 bucks. It gaps down. It gaps down, and it's like you get excited, right? You want to short it right away, but you can't because you can't manage your risks like that. What you want to do is wait for 1, 2, 3 candles on a 5-minute chart. Now, I use 5-minute charts. A lot of people use 1 minute, 3 minutes. I use 5 minutes, and there's a very, very specific reason for it. And it's more due to my personality, but also my account size and things of that nature. 1-minute charts make me overtrade. As you can probably already see, I'm a very, very hyperactive person. It has been the mission for Saeed, my mom, and everybody else that knows me to try to control my own impulses. I'm a wild, wild man. So when I traded, if I traded 1-minute stock charts, it makes me overtrade. I see too many patterns because say these 3 candles right here that you'd see if this is a 5-minute chart, you would see 15 of these if it was 1 minute. So the patterns would be all over the place. You'd see too many. So I'd be sitting there scalping stocks for a couple pennies rather than trying to do what rich men like to do, which is take big gains. I mean, you got to take You got to take the whole move. There's no money in taking 10 cents, 20 cents out of stock. Not when it's 200 bucks or 100 bucks, 50 bucks. You got to take dollars. Now, I know a lot of you guys are thinking I don't have that much money to trade $200 stocks or $100 stocks or $50 stocks or $10 stocks. I can only trade penny stocks. Right? Isn't that site? Everybody thinks they got to trade penny stocks when they have a small account. But I'll tell you what. If you have 10 shares of $100 stock, how much money is that? $1,000. Okay? Now, if you have 1,000 shares of a $1 stock, how much is that? $1,000. If a stock goes up 10% on your $100 stocks, you get $10. How much money you make? $100, right? Even though you have 10 shares. If your $1 stock goes up 10%, how much money do you make? $100. And I'll tell you this, and this is just a fact, me and Saeed talk about this all the time. There is no range on these $2, $3 stocks. So to get the 10, 20 cents is not as easy as it looks. Because if it goes up 20 cents in a day, say it's a $2 stock, you're not going to get all 20 cents. Because that would mean you have to buy it right at the exact low and sell at the right exact high. Most likely.
Plain and simple. I mean, we completely banned $100 stock trading. Plain and simple. We don't do it anymore. There is no edge to it, and most of them are chat room and the gurus make money. The rest of you, just hold the bag, basically. There is no edge to it. Plain and simple. Even if someone asks me, Saeed, take a look at a chart that's like 8 cents, 30 cents. I just pass, I mean, there is no edge to it. There's too much manipulation and all other things goes on the stock. So, I mean, I advise if you're a new trader, just avoid them. Avoid them like a plague. I mean, if you see somebody pumping them, most likely he's selling to you, basically.
There's more range in these other stocks. So I'd rather think about this. What would you rather do? Trade a $2 stock that has a 10-cent range, or say 20-cent range. Say a $2 stock has 20-cent range. Are you going to be able to get any of that in there, right? Between all the fluctuations and the lack of liquidity, or is it easier to take a $30 stock with a 10% range? That's $3. You got to take a buck here, a buck there, whatever. What's easier? Well, guess what? If you have 200, 300 shares of a $30 stock, it's not that much investment. And if you make $1 or $2, how much money is that? It's a very low percentage gain, but it ends up being hundreds of dollars. And that's, really the key to kind of everything is there enough range for you to get your teeth in? And so like something like this, like say a Tesla or something, right, at ORBs, if it can move down $10, $13 in a few candles, what if you had 100 shares of it? Doesn't have to be much. You're still going to make some money.
Hey guys, also remember these big stocks, it's not only you and me that's trading it. There's hedge fund that trades those. There's algorithm, that's high frequency trading. There's robot, all kinds of things trade those things. So if you get on the sell program, you don't even have to do anything. You'll just flush and it'll just hit the profit. All you need is a good entry. That's all there is to it. It's not like you're fighting with another trader with these big stocks, like, penny stock, like you're like basically selling it to someone else. But this big stock, there are institutional buying in there. There is hedge fund that buys it. They have buy program, they have sell program. So you have your allies out there, so you don't have to be worried about it. All you need is a good entry, whether long and short,
So, Syed, can you go into, this is a 1, 2, 3 setup. So this is a setup that we've actually, over the years, we didn't use it that much, and now we use it like every single day. I mean, this is like our bread and butter. And this is Saeed's bread and butter. He taught it to me. Saeed, can you go into this bad boy?
This is basically ORB that Kunal talked about. That's the continuation setup. What is the continuation setup? Things tends to move towards the trend. So, if a stock is gapping up and open range break out, you expect them to go high. Stocks gap down, and then we have open range break down, stock tends to go low. This pattern is a reversal pattern. What is a reversal pattern? Reversal pattern is that nothing goes up forever. You see stock that's been going up for days and days, and then you see stock that's been going down for days and days. Now, just because a stock goes up for days or down for days doesn't mean you can, stock is oversold. You just can't buy it because things going down for days doesn't mean it's going to stop. It can still go down. Same time, just because stock came from $1 to $4 doesn't mean that it's going to go to $10. You just cannot time those things. You can just hope and pray that just because the stock is up, I can short it and it will go down. No, it doesn't work that way. So 1, 2, 3 reversal is a reversal setup. This is where these are the pattern where you can see some sort of trend changes. I mean, stock had a big run and it's time the run might be over, or stock had a big downtrend and it's time for a quick reversal maybe. So it works in all time frames, and comes in both a long setup, the end of a downtrend, and a short setup, the end of an uptrend. I mean, this is a very explosive intraday reversal at key with high risk reward. I mean, this works in all time frame, So basically, we're talking about if it's a long setup, the stock is on a downtrend, and then it gets a bounce basically. Just because a stock is in a downtrend, it bounces doesn't mean that you can just chase the stock up because you don't know. You need some sort of confirmation, that whether it's for real or not. So after the initial bounce, the stock have a slight pullback. But after the pullback, it makes a higher low or a quick lower low, but quickly reverses back into the range. Or it makes a low similar to the previous low, creating a double bottom pattern. This is our sweet spot trade setup for a long trade. On the short side, stock has been running for days now. It's in overbought territory, or the stock has a big run. Whether it's by a gap up on news or whatever the reason is, doesn't matter what the news is. It pulls back after a big run. It can make a lower high or a higher high, but quickly reverses back to the range. Or it makes a high similar to the last high, creating a double top pattern. This is our spot for a short trade. Now let me give you an example, see what I'm talking about. Okay.
Dun, dun, dun. Maybe I'll show you one. Maybe one. Hold on. Here we go.
Okay. So this fix, big gap up, right?
Boom, 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 boom.
Boom, boom. Okay. So it made the first high at 1. Pulls back so far. Very orderly. Looks great. You have your first pullback. Makes a new high. Boom. Okay. Now, what happens next? As we talked about, it made a higher high. Quickly reverses back into the range. Now, this is where you start paying attention. There might be something going on here. It made a higher high, but there wasn't enough buyer there. There's no buyer anymore. What happened here? Back to the range. Now, aggressive trader like me and Kunal, we can take a position when as soon as it hit the higher high at like this level of 3 with a stop above the high of the day and short it. But if you are, if you're on confirmation, you want the range to break. The stock broke the range when it took out that intermediate low. This is where the confirmation came from. Like conservative trader can short it here with a stop above the high, and boom, look what happened. The stock, it's a trend change basically.
I like to be early. That's just that's my style. That's us Saeed's too. We'd rather buy in anticipation than confirmation.
I don't suggest that, but because we're at a stage that we know what might happen, but there's 2 entries there basically. Aggressive. That's what I said. Aggressive trader will take an entry right on the red bar with stop above, whereas conservative trader will take when there's an actual confirmation.
So there's 2 types of entries, guys. There's anticipation and confirmation. Confirmation means you're buying when the pattern breaks. But the thing with confirmation is if you do it, you're, number one, giving up a lot of gain, but you may be getting into a stock while it's too extended to follow through every blue moon. When you're anticipating, your advantage is you get a much better price and your risk is much lower because your stop is very near because you're anticipating. But the downside is time. There are times where you may be sitting in a stock for a little bit of time. It could be minutes or hours sometimes. Most of the time it's just minutes, but you're not getting it as it's moving. So you're sucking up buying power and part of your capital and your mental capital, and you've got to watch it, when you're looking for confirmation. Where when you're anticipating, you have to watch it as tight. You short or buy and you put your stop loss and then you let it develop into where it's going to do. But the downside is you don't have the confirmation, so you have to wait a little bit of time. Now, once you get good, you're going to want to do anticipation, because why would you short something at, say, 34 when you could get it at 34.75? For people like me and Saeed, this type of trade, we might be in 1,000, 2,000 shares short. So that 75 cents is $1,500. So it doesn't seem like much, but What if you did this 3-4 times a day? The difference between shorting it at 34.75 versus 34, that's 75 cents. If you do it over and over every day, and then you do it over and over every day for a year, it could be $1 million. I don't know what it would add up to, right? But if you're talking about a lot of money, that's why, I lean towards anticipation with high probability versus getting something on confirmation, because by the time something confirms, it's like all the suckers are getting into it. Because any dork can draw some squiggly line on a chart and be like, I'm going to buy it there. That's all I have to do. But I've never met any millionaires that just sit there and draw lines on charts and they're millionaires, right? If that was the case, we'd all just buy some books, Trading for Dummies, and we'd be rich. But it doesn't work like that, right? You got to be you got to be the first one in. When you're seeing this thing develop, that's my personal belief. If you want to really, really kind of do this long term, just like when you're drawing flag patterns or whatever, when you can anticipate them, you've increased your earnings, multiple times.
I mean, this is another example. Okay, go ahead.
Oh, sorry.
Okay, so this is another example. I mean, that one was a higher high. This one is basically stuck at a big run, pulls back. Okay, everything is fine. Okay, we got to pull back. I mean, it pulled back before. It went up again. Why it's not going to go up again? Well, it pulled back and then went up, but then it got stuck basically. Then eventually it just broke the line, your little trend line, the little swing low that it had, and boom, there you go. I mean, these are like, for sure, I love this pattern because if the stock is parabolic, this type of pattern gives the most bang for your buck. Because look at the risk. The risk is so low that, I mean, we're talking about 20-30 cent risk with the potential $1-2 gains, Absolute best pattern for me, at least, especially on the short side. I mean, it works beautifully on the long side as well. But for parabolic, the stock has been running for days, little biotech name or whatever. This type of pattern is the moneymaker pattern, plain and simple. USO, big oil stock. I mean, look what happened. Same thing. We had a big run, pull back, everything looks great. People getting in again. Oh, this other flag. Boom, it goes up, made a higher high. What happens then? Back to the range again, and boom. There you go. Next day, just boom, crash.
So, and I'll tell you one of the mistakes I see traders make all the time. People think that this area right here is a breakout, but it's only 2 taps. It's only 2 taps. And so when you're looking at stocks, guys, if you're just breaking a previous high, that's not a breakout. So a lot of people think a break over resistance means breakout, but that's not the truth. A break over resistance just means a break over resistance. But if it's just a break over a previous level of resistance, that's not a certifiable breakout. You need multiple tests at highs to call it a breakout. And so, right, you're tapping an area. Stocks are they're like freaking pressure cookers, right? They're like pressure cookers. Us Indians, we use pressure cookers for everything. And it's like you slowly build up, and you hit it, and you hit it, and you hit it, and you hit it, and finally, right, you explode. And that's how stocks are. Just because you hit a previous high doesn't necessarily mean that's a breakout. It's not a breakout. You need multiple tests of highs to weaken that area, but also make it more powerful so that you can get long.
Hey guys, same with the breakdown. I mean, I just want to make clear, it's a process basically. Breakdown is also the same thing. The more tap, the more better. The more powerful the move will be. If the moves come in too quick, most likely it will be faded. Plain and simple. This stock particularly had a big run, and then, good. Kunal, I want to show them a long example. You have a LABD chart for the?
Yeah, I do have. Oh, hold on one second.
I don't know. I had the slide in there, but I cannot find it. Even for today, LABD today.
Hold on, let me get it. Dun, 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 dun. I get one of these stupid Asus monitors over here. Just shut off. All right, hold on. LABD today you want?
Yeah, 5 minutes. Okay. So here, if you can see it, today, just today. Okay. Uh, yeah. Zoom it up a little bit. I mean, like widen it a little bit. Okay. So basically, if you can see, this is a biotech stock. Kunal, I mean, show it to today. This is a biotech has been basically in a run. This thing, they're unbelievable, amazing run on this. But you still can make money shorting them. LMED is one of those ETF that's like a short biotech. In other words, basically, anytime biotech goes down, this goes up. So look what happens. We had a small 1, 2, 3 long pattern here. This LMED gapped up today. Made the first run, as we talk about, that's the first spike. Doesn't mean anything. Do you chase it here? No. For all we know, this stock's in a downtrend. It can fade any minute again. We wait for a pullback. Stock pulls back. This is basically you have a higher low basically here. So if you buy it here with a stop under, look at the run it made. Now that's still 1, 2, 3. 1, 2, 3. Aggressive entry will be here with the low below, right on this VWAP or EMA 20 EMA.
I see. And it does this all the time. Biotechs actually are the best ones for 1, 2, 3 patterns, I've noticed. Because they're so weak, but also people are buying them. So like you get these bottoming patterns. So like guys, you see this, even the other day. Hold on one second, let me get my chart. Hold on one sec, guys. I forgot to plug my computer. Alright, so like you can see this even the other day. Right, biotechs here, like your LABD's at $35.40, and it makes this push down to $31. See that? So you make a low. So that's your 1. And then it pops up to $32. So that's your 2. Then it pops up and it makes a higher low. So you got 1, 2, 3. And now you've got your entry for the late day push. It's a very, very simple day trading setup that it works really well, I think, because number one, I don't think that people necessarily they can see it that well, which makes it awesome, right? If you can't see it that well, but also just common sense. Stocks are just based off what? Really trend trading in general is based off higher highs and higher lows and bases and consolidation. So there's not like that much into it. So if you can get a pattern that nobody can see, but it's really just based off higher highs and higher lows or lower highs and lower lows, that's pretty simple stuff. It's just about training your eyes to do it. And that's really what technical trading is all about. Can you train your eyes to see the pattern? And so how do you do that? It's about looking at charts all the time. Like in our boot camp, in boot camp class, Saeed makes some of the charts for us, and we can go through 100 charts in one class sometimes just to keep training our eyes. And we make flashcards for our students. We had on the site we had flashcards where they can sift through hundreds of stocks because it's literally about pattern recognition. See, the 1, 2, 3 pattern is complicated in a way because it's you're talking about higher high, higher low, dip, rip, this and that. But if you just think about the 1, the 2, the 3, and then if you train your eyes, you look at that pattern 1,000 times, 2,000 times. Guess what happens? You start to develop muscle memory. You start to develop the muscle memory so that you can see it as soon as it happens. It's like shooting a basketball or throwing a football or doing anything that you do. That's how trading goes, is that can you literally develop your eyes to see it in a hot second, that pattern. And when you can do that, that's when you can move quickly because so much of trading is, making quick decisions. And so I will tell you, like, sometimes we look at a stock and we're like G chatting with each other. We have to make a decision in 3 seconds.
Right.
Well, how do you make a decision? Like sometimes we put in $100,000, 200. Saita's like today, the other day we were talking about Sam. So I 3,000 shares of it. I'm like, dude, you have $100,000 in this, and we talk. What you have to do is you have to make a quick decision. So the only way you can make a quick decision without like literally risking your life and your life savings is what? There has to be a pattern there. Something that you've seen before, so you can make a quick decision in a hot second because your eyes have seen it before.
And it works for you.
And it works for you.
And it's doable because, I'm sorry, Kunal, sorry to interrupt, but I just want to say something. Because, we have our bootcamp student post all their trade review. This is a website that they actually post all their trade. And I see these new guys. I mean, they have good eyes and they're amazing. I mean, I don't think it will take them years to learn those patterns, but I see these new guys trading those patterns so perfectly, So it can be taught. I mean, it's, attainable,
I mean, you just got to see it enough times. You got to train your eyes to do it. And you don't have to do it like for 10 years, right? If you want to see a pattern, like a flag pattern or whatever it is, I mean, how many times do you really have to see it? Maybe 20 times to know what it is, and then 100 times actually instinctively know it, and then 1,000 times actually be able to go and do it. You can get those repetitions quickly. We have our students, they trade on a simulator, they're just practicing. Then when they even trade live money, they're trading really small. They're trading 100 shares at a time, so they're not risking much, just for the simple fact so that they can practice. Because in trading, I think the hardest thing is, Saeed, I don't know if you think this is, I think the hardest thing for these guys is to learn to make even $1 a day. Like to just finish green is hard. Most traders lose. But if you can just even make $1, like you can just sit there and be green, and say, hey, I'm a winner. Like I'm not losing on this stuff. That's the biggest hurdle I think that any trader can go through.
Also, there is there are a lot of mental and psychological aspect of it that we don't have enough time to talk about. But when you have some proven patterns, that you can play around with it, that you understand, that know that it has high probability of work, the fear kind of goes away. You can manage it better. I mean, there are hundreds of strategy out there. There are option trader, there's, all kinds of things going on out there. But you don't need all that. You just need few patterns to make a good living. That's all there is to it, And the more you do it, the more confident you will become, and your fear of trading will diminish, eventually.
So guys, it's about what you do well. It's not about what pattern is the best. There is no such thing. Like when we're teaching class and doing our things, we teach 30 different setups. I don't know, probably about 30, right? Between all the breakouts and pullbacks and intraday. So we teach 30 different setups. No one setup is better than the other. What happens is you as a trader, what you gravitate towards is what gives it probability. So like I have setups that I try all the time that are probably low probability setups, but I just trade them well. So they end up being high probability setups. So
you're comfortable with them, right?
Yep.
As long as you understand the trade, the success rate will be higher. It's always like that because you are more confident. It's always, trading is also a mental game. If you're comfortable, I mean, I've seen Kunal, it's, trade that I thought is like one of the, it's not going to work, but he made it happen. Why? He was confident in that setup. He was not scared. That's, that's a very important thing, to remember. You got to be comfortable playing the setup that you trust. And you have, it's going to work. High probability, plain and simple. You're comfortable with it.
Just I can like it, I go balls deep all the time. I mean, that's just how it goes. If I like it, I'm in. And that's the huge thing. There's no one setup that works better than another. But as a trader, what you have to do is catalog your trade. get a trade journal or a software and upload your trades and figure out what you do well. Like I do, we trade a lot of different setups, but in essence, in different types of markets. And this type of market, me and Saeed do X type of trade. When the market is bottoming, we do X type of trade. And when the market is in a full bear market type of flush, we do XYZ type of trades. And they all differ. And the reason they differ is that we know from just being buddies and brothers for so many years that when the bear market type of trading happens, we're going to do this all the time. We know each other. Like I know what he's going to do. I know he knows what I'm going to do. And we know that these type of setups make the money. And then when the market starts to bottom, like the S&PY did like in September, October, there are certain types of setups that work. And when the market is bottoming. And then when the market goes in its big bull run like it has now, there are literally a whole different type of setups that work. But it's all dependent on what you do well and then what works well with the market. But like what we do today is not probably what we did a month ago that worked. Yeah, we still try some of the stuff once in a while, but right, what we do today is very, very different than what was happening, a month ago that we were making a lot of money in. We were making a ton of money on shorting biotechs.
Sorry, you also have to change your bias based on the market environment in. This is a roaring bull market, plain and simple. So if you're short, you better cover early and, don't expect any home run, plain and simple. That's the next step, you got to change your bias. But that's the advanced step. We'll worry about it later,
Cool. So let's talk about this last setup of ours. This is the quick pullback buy. A quick pullback buy is a momentum stock that has a strong run in the morning, and then we'll have a pullback to support as traders take profit. So guys, in essence, we're looking for a few different things. If a stock doesn't ORB, right? Not every stock ORBs. Actually, maybe 20% of stocks that gap up ORB. Let's just say, throw up. So what do you do with the rest of it? Well, a majority of the time, a stock is going to retrace. So it's going to pull back. So we need to have a pullback setup to get into these type of stocks, because just because they don't ORB doesn't mean they're not good. It just means that at that moment, there were sellers in it, but it may be ready later to go an explosive move. So key characteristics: strong upward movement in the morning, preferably at higher volume. We want a quick pullback to either your 9 or 20 EMA. We want to buy that first pullback with the stop below the last level. So what we're looking for is like this type of thing. So if you look at this V, this is a clean daily chart. Notice how like it's breaking out, right? Clean daily chart. Stock gaps up, and then it has a nice, easy-go-looking pullback near that 9 EMA. You get a rounded bottom. So you buy this thing, put your stop in your 9 EMA, and then your first target is going to be your old highs. Always the old highs when you're doing the pullback. You want to sell somewhere into that spike, and then you keep a few for the breakout. So EFOI is actually, a quick pullback buy that didn't work. So I lost thousands of dollars on this thing for a couple different reasons. This is a good lesson for you guys. Thousands of dollars on this stupid ass trade. So this stock exploded at the open. It pulled back to your 9 EMA here in your VWAP. And so I bought it right here at 18. My stop was supposed to be at 18.70, right under the 9 EMA. So I was only going to risk like 20 cents. But being lazy during this day, because I was already up so much money, I got a little bit lazy with my plays. I didn't put a stop in right here. And so you know what ended up happening is by the time I looked at it, it was down here, because guess what? In 3 minutes, it moved down 50 cents. So my, 4,000 shares or whatever I had up here, by the time it got down to over here, my gain was too big. The best part about this type of opening setup is there's a line in the sand. If you are buying a pullback on your 9 EMA, guess where your stop loss goes? Your 9 EMA, right? You don't have to risk too much. If you start risking too much, then all of a sudden your reward to risk ratios get really, really screwed. So this was something like this is something that totally threw off my day yesterday because I took an awesome setup. It didn't work. Sometimes they don't work. But if I had just taken the small loss and just lost to 20 cents, I could have reloaded lower. Or when I saw the pattern, when it broke its flag, and I would have had this huge run. But I burnt too much of my emotional and mental capital because I was very, very lax on my risk management. As traders, our number one job is to manage risk, to stay in the game. Because when you manage your risk right, it's not just that you're keeping your losses small, you are keeping your mental capital tight. Meaning, this trade, like I have tons of capital, so when this trade started to rebound, I could have got back in and made this big run and made all my money back and then some. But I didn't make any of my money back and then some. Why? I had broke my mental capital. I depleted all my mental capital due to my aggressive mistake. And so then when the time came to load up big and do what I had to do, I wasn't able to do what I had to do because I had blown the most important part of my trading account, my mental capital.
That's what I was saying. That trading is a mental game, and I mean, I've been trading for 17 years. Every setup that I take now, and whatever I wrote for our boot camp, is all low risk, plain and simple. I started trading in the internet, bubble days, and there'll be stock that goes up $500 overnight, plain and simple. And it was basically the Wild West. And I lost a lot of money, plain and simple, because I had no, we didn't have Twitter back then, we didn't have webinar back then, we didn't have bootcamp back then. I was basically, it was basically AOL message room and Yahoo message room, and I didn't know much better. And I lost a lot of money. But then over the years, I developed some strategy that keep the risk low. And these are the type of setup that if you miss, if it doesn't work, you lose 20, 30 cents. But the setup is so tight, it will eventually give you. I mean, there are trades that we have tried 3 times. We lost 3 times. We lost 20 cents, 10 cents, 15 cents. Big deal. But when we nailed it, we made $2. Plain and simple. That's our strategy, mainly. Keep the risk low. I mean, we are day trader. We're not swing traders. Swing trader can afford to have 4%, 8%. I know investor, they can even take 20% loss, and they'll be fine. But we can't do that. We're a short-term trader. Momo trading is our game. If we take a 10% loss in a day trade, we're kind of done for the day, plain and simple. So you gotta find setup that has low risk, high reward, plain and simple. Every setup that we described so far, if you see the stock, pretty much everything has like minimal risk with big gain, plain and simple. That's our model. If you're a day trader, you gotta have low risk.
True. So let's look at iTech. So this is a simple, this is a very, very kind of simple setup too. This is actually a stock that, hold on. Like if you see here, we tried to ORB iTech. I don't know if somebody remembers it. We tried to ORB iTech. See, we have the 3 candle consolidation, and it didn't work. Like we bought it, and then we got out for a really small loss. That's what risk management does. You have to get out for a small loss. So we bought it, didn't work. But then look what happens. Like you get another setup later on. Stock pulls back to the 9. And so now you start to base here. See how you're like holding your 9 EMA here. So every stock has its own story. Once you have a stock that has a relationship with a particular area, that's your line in the sand. when you're looking at stocks, always think about the line in the sand. If the stock goes against me, where can I get out? Where is it having a relationship? Where is that line in the sand? Because once it crosses the line in the sand, I've got to get out of it. So you can see on this, it pulls back to the 9 and it's just riding up it. So you know what? This stock is having a relationship with the 9 EMA. And then once you tap, 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 triple tap breakout, well, now you have just these epic, epic gains. So what is iTech like the best stock in the history of the world? How can it go up from $8 to $20 in a couple of days? No, iTech's a big piece of shit. It really is. But guess what? The day that these news comes out, if people are reading it, everybody wants to rush into it because the float is so low and the volume is so high. Look at each one of these 5-minute candles. 1 million, 2 million shares. The stock probably did 50 million shares in volume. Right now it's doing like a few 100,000. That's your recipe for explosion. AQXP, same type of deal. Look at this bad boy. Stock gaps up. It's got earnings out. News out. It's $1.50. It gets up to $2.50. I hit this thing right under $3 too. This was hot. Stock pops up. 4 candle sideways movement. You get your 9 EMA coming up under it. Tight range. You know, just freaking order up, 3, 4, or 5,000 shares right under 3. Nothing too crazy. And then it's just explosion. And this is an awesome day. We had all our students over. So like in the boot camp, our boot camp students staying in, we have a open invitation to come do Casa de Canal. So I live with all my 4 knucklehead veterans that I grew up with. We're all like childhood buddies from age 10 years old. We have a spare bedroom with a bunch of bunk beds and stuff in it. And so we invite all our students to come over once they, finish boot camp. And so come summertime, we had like 6 of them over. And it was the day that this thing exploded. And so it was actually one of my students, Jake Nikovich, who was like, dude, this thing's going to blow. And so then we all bought it, and it cruised up. And then look, once it's at $6, you're thinking it's got to be a short, right? Because it's up so many percent, 400, 500%. Me and Saeed were actually looking at it for a short too. And we tried it for like a hot second here because the stock was up so much. But then once it started consolidating, guess what you have to do? You got to flip your trade. You got to flip your trade and say, man.
Basically, that pulled a 1, 2, 3 pattern we were talking about earlier, but somehow it didn't work because there's so much energy on this stock. But still, it's what the short. You lost 20 cents. Big deal. If it doesn't work, you just flip it. But you have to, try sometime.
And you can see this tight consolidation right here, and you got your EMAs riding up under it. It's just so tight that a lot of people are afraid to buy a stock up multiple 100%. So am I. I'm fucking scared shitless. So is Saeed. Saeed is like 68 years old, and he's scared.
No, I'm not. I'm 40-something. Come on.
I'm just kidding. Saeed's 40-something. He's 40-something years old. And he's scared shitless to buy a stock that's up. I don't even know how many percent. It's like 300%. We both are. But we also know just because something's up 300% doesn't mean it can't be up 600% or 400% or whatever. So when the short doesn't work, what do? Well, once you get tap, 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 and you get this tight range. Guys, stocks get their power from consolidations and bases. When you have a momentum stock and it goes sideways in that thin range, that is your clue to go in big. Because even if it doesn't work, you're going to get out for a small loss because look at what this range is. It's like a few pennies, right? Or 20 cents or whatever. So if it's so small the range, then guess what? You can go into big size and you'll have very small risk because your stock goes under here. So most traders think their risk is huge because the stock is up so many percent. But that's not the case. Your risk is just from where you buy to where your stop loss is, where your line in the sand is. That's what your real risk is. So you can get back in it Right? If you're buying, say, 3,000 shares even of a $6 stock, I bought 6,000 shares. So nothing too crazy. You have the opportunity to make monstrous gains when you catch the right ones. And that's the beauty of momentum stocks. Same type of deal. This is VSCP. We killed this. This just a few days ago. So this stock gapped up, and then actually you can see right here at ORB, and it had this huge pop from 250 to 4. And then look what happened later on. This tight range. Big range gets tighter and tighter, tighter. Stocks get their power from consolidations and bases. When you get your moving averages riding up under it, and then you get a flag pattern, tap, 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 tap. It's a fucking pressure cooker right there. You are testing the area. You're testing the area. You're testing the area. And when it finally explodes, I think I bought, just a handful of thousand shares right here. I sold my last shares at a sixes. You have this monstrous gain. You don't have to really put too much capital in it. It is just literally, am I in the right stocks? And then am I getting it at the right prices?
Hey guys, tight trend is money, plain and simple. Always pay attention to tight trends, long or short. Tight trend is low risk. Tight trend is explosive. Move happens in tight trends. Either way.
Tight range is worth $1 million to you.
I mean, you have your backup exit, plain and simple. Low of the range, high of the range, plain and simple. That's our favorite setup.
Tight range. Tight range means explosion. Tight range means explosion, guys. This is another type of opening rate setup. So see the stock that shows up on our gapper list for a gap up, right? So this thing gaps up 30, 40%. First pullback buy, break over VWAP, and you get these explosive moves. Low float stocks, I mean, these things can really, really get crazy. So make sure you manage your entries. So, fold. This is a gap down. Me and Sai do this with biotech stocks all the time. Biotech stock gaps down because they're, when they're downtrending, during September, they're just getting crushed. Stock gaps down. So when you get the gap down, you want to short it, right? You want to short it in the hole because you just learned this PRD's breakout setup that we just taught you, right? We want to short these gaps. You're going to play these gaps. But guess what happens? If you short it too low, it's not going to work. You got to let it bounce. If it doesn't ORB, let it bounce. And when it bounces into its MAs, now you got a low risk entry. You short, set your stop, let it rock.
It's the opposite of intraday pullback, but it's on the other side. You just flip it, basically. This is for short. You want to wait for the initial bounce, and then you will short it.
Market pullback in September, and markets just all over the place. Amazon gaps down. And you're like, man, Amazon's $500. I want to short this in the hole and get it, get all up in it. Can't do it. You wait for the pullback, right? You wait for the pullback, let it bounce, so it gets down to about 539. Let it bounce. It bounces up to 544. You get a red candle. You stop at the 9 EMA. First target back down to low of day, and then let it rock.
It could have do VRX. I mean, we did that trade today. VRX blue.
Oh, yeah, we made a couple $1,000 in this bad boy today. Oh, let me see. Hold on. So, guys, for those of you guys that don't know, so we're on screen share all day. So, like, I have my trading platform up and all that shit. Sometimes it might be part of the day, depending on my internet connection, but usually when this thing's on. So, we made, $2,000 on VRX today? And I probably never had even more than 300, 400 shares of this thing. we shorted this thing right at 80 bucks, give or take a few dollars. So, dun, 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 dun. What do we short this? Same type of deal. So, let me show you a little bit more clear chart. All right, so VRX was the same type of deal. So this stock just nasty, nasty open. See this? It drops like 20 bucks, give or take a few. All right, and then it pops right up in to its MAs. So we short this thing right over here around 80 bucks. It drops down a couple dollars. No go though. We take a few off the table and it breaks back over. So you got to get out of it. You got to get out of it because what? It didn't follow through, right? And we're always stealing out. So we'll take a partial profits when it gets actually down a little bit. Always taking profits. And then look, it just happens to keep going. So now it keeps going. And look what happens here, though. This is the money setup. So you get a 1, 2, 3 essentially right here also. Right at 83 bucks it taps. Then it comes down. And then it taps again. And then you also break this trend line. See this? Tap, 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 tap. So it's just short. Set your stop right above. And then it's just let it rock. And we recovered this thing all the way down to 77 bucks. Just very, very simple stuff. So you think you got to have a lot of money for this, but guess what? If you short, like I shorted like 200, 300 shares of this thing. But if you can make dollars, you can still make $1,000 on a very, very small amount of equity. And then, of course, that type of stock that's really, really liquid and things of that nature, you can use margin and all of that stuff because it's liquid. So that was actually, I think that was our main moneymaker today. IBB, so this is your biotech index. Same type of deal. The stock gaps down. See this? Like you want to short it into the hole. Can't do it. Let it bounce up. Tap into your 9 EMA. You short. Set your stop. First target is back down to the old lows. Let it rock. Tesla. Gap down. Can't short it in the hole. Let it pop. Once it pops, rolls over. Oh, shit. Set your stop. First target down to the low of day. Second target down to the previous lows. Set your stop. Let it rock. So, folks, that is how we trade the market. Many of you guys are asking right now, what type of, what happens after this? We do our 60-day boot camp, which is starting in 6 days, November 10th. Okay.
Hey guys, Kunal, we have more setups, so I just want to mention, there is red to green, but we don't have enough time to cover it, so.
That's true. So guys, we give you 3 setups out of 30 that we trade. Okay? Because we went into the open, and so we give you the open ones. We have a few more that we do, but there are setups that we do middle of the day with the 20 EMAs, the VWAP. The VWAP is something that we use. It's probably our number one indicator we use. Then the end of day setups, which is the day-long consolidations, or the end of day fades, or the gorilla runs, end of day gorilla runs, different setups that we do. But you'll learn all of this stuff in our 60-day boot camp. Our boot camp is awesome. So like what you see me inside you do right now, you get to see it every day. 4 days a week, boot camp goes on. Sundays, Tuesdays, Wednesdays. Thursdays, 8 o'clock Eastern time. I come up on, I wear my finest of tank tops and my best of my Bulls on Wall Street hats, and I teach you guys with everything I got. You'll see me just hooting and hollering for hours every day, but they're live, and you can ask questions, and I sit there till every question is answered, as always, right? Somebody got a question, I'm gonna give it to them. That's your responsibility as somebody with knowledge. But you get 1 month, 4 live classes a week to get through the course curriculum, okay? Then what happens after that first month is awesome. Because once your curriculum is done, I put every one of the students, we start building business plans. Just like, think about this. You're going to go in a fucking restaurant. And you want a bank loan from a bank for $2-3 million to build a restaurant. Do you just show up saying, I want a loan? Do you think you're going to get that loan? No. You go into the restaurant with what? A business plan. That's what I have my students do. After that first month, after class is done, we build business plans that we update all the time to figure out who we are, what we are, and what our game plan is. Because in our boot camp, we don't just teach day trading. We teach all of trading. It's about momentum, about trends. So we build those business plans. Okay? From there, we put the students on 1 month of trading simulator access, where they go in and use a simulator just like what I'm trading on. Live data. They're going to look at charts and do all the same stuff. They're going to do the routine that I do. Everything I do, hopefully they do. Now, everybody doesn't do it, but that is the hope. And we give them all the tools they need to follow along and do all of that stuff. And then guess what happens? From there, during those days, I'm literally on screen share. So we have a program. I'm on screen share. I have my trading platform up. So this is like doohickey over here and these charts. I have it up during the day while these students are out. And so the students, everybody, they actually see my trading platform up, my charts, all of that stuff. It's called Bulls Vision, and it comes with the bootcamp. So you guys are going to watch me trade. Now, this is huge, guys, because when you are taking a class or you're reading some damn book, you're always wondering in the back of your mind, does it work? And guess what? It doesn't matter if it works because you're reading it, because you don't have the experience yet to actually go and make it happen, right? What you need to see is somebody lay it on the table and make some trades. And so that's what I do in front of my students. I'm on video. We have a chat room at the Bulls on Wall Street chat room where I am trading in front of my peoples every day. So, you come in and you're going to be in the chat room and I'm on video and I'm telling people all my alerts. So, and I tell them what I did right or wrong. Today I made $2,000, but I lost $1,000 in this or that. And during the day, I'm telling them exactly what I'm doing. And I'm on video. So, I'll come in here in the morning and you'll see me on video and you'll see me on screen share. So you can start learning what the heck it is I'm doing in real time. Because you can't learn trading from a book. The trading doesn't move. When you're trading from a book, does the charts move? Is it in real time? You ever looked at a chart and a book, and then when you're trying to do it in real time, you're like, man, it don't look like that? You haven't trained your eyes to see what a trader needs to see. So that's the whole point of what we do. Once those live classes are over, I'm going to sit there and tell you what I do. And then at the end of the market day, and remember, everything that we do is recorded, archived for life. You have access to it for life. I'm going to do a market recap, and we're going to talk about what I did right, what I did wrong on every single one of my trades. So like when we have a market recap, we're going to go in here, we're going to talk about all these trades. why did I lose so much on this? So first of all, like my loss on this should have been 300, $400. What did I lose on this? Well, I made a mistake. We're going to talk about it. How do you minimize it? How do you make sure it doesn't happen again? So on and so forth. So we start talking about what went down, and we reverse engineer these trades. I think that's really probably one of the secret sauces to what we do is very few people are going to let you look at the trading platform. They'll show you their charts. You ever see some guy, if you subscribe to a service and he's got a screen share and all you see is his charts, that's a scam. He's probably on a simulator, right? You want to see somebody click those damn buttons, and then you want to see how much money they make, and then they better talk about how much money they make. That's the name of the game. Because if they can't do that, what good are they, right? There's no point of being in somebody's chat room or watching somebody on video in a class, and he tells you 10 days later, like you made 10 grand. Well, you probably want him to post it that day and try to figure out how he did it, And so I think that's probably one of the things that we do really well. I screw up all the time, guys. A lot of our trade recap sessions are about me screwing up. I lose all the time. Like probably one day every week or two, I lose, and we got to talk about that. And so I think that's awesome. So we do these recaps. All our classes got interactive homework, quizzes, and then you have access to our chat room so that you can watch me trade. I think that's huge. And then you get a course book. It's the Trading Bible. You'll see you put it right next to the throne in your bathroom, and it's awesome. It's probably over the years been built over to 140 pages to probably 200 pages. Who knows? But it's the Trading Bible.
Guys, hey guys, it got more boom stock internet set up from me, in more details, by the way.
That is also true. Saeed writes all our intraday trading setups, classes. I've been day trading forever, but the things that I use in terms of the EMAs, and I never used EMAs till recently. A lot of the things that we do, Saeed taught them to me. Saeed's my big brother, and he's taught me all these little fancy tricks, and we've incorporated into what we do. And so, now, when you see me trade, it's like I got the 20 EMA, the 9 EMA. I never use any of these. Traditionally, all I ever used was VWAP. And then Saeed kind of was showing me, hey, when these stocks pull back to these areas, and so much of trading is trial and error and trying to figure out what works with the type of stocks that you trade. And so the type of stocks we trade, momentum and trending stocks, what we do works for that. And so, Saeed was a big part of that. And he'll come in and, we'll never get a commitment from him on whether he's going to teach one of these classes. But I teach his classes for him for the intraday setups. And
you've gotten good at it. You've gotten really good at it. So
and you're going to see him every day in the chat room. So that's one of the things that you'll.
Yeah, but I'm in the chat room.
That's awesome about our chat room. It's not just me. Saeed is in it. Mary Beth is in it. We're all sitting there all day. And Saeed calls out just as many plays as I do in the chat room. So when you're in the chat room, this is our chat room over here. It's not just me sitting there just talking to everybody, doing all this stuff. Saeed is in there and Mary Beth is in there, and I think that's just huge. Is like, do you have other people in there? Because, well, guess what? Right? It takes a village. I think we have a cool community of people that will do this. That's what it takes to learn. If you think you're gonna watch a bunch of videos on YouTube, you're gonna watch some online tutorials, not gonna happen. Trading is a profession. It is a job. No different than being a doctor or a lawyer. It is a job. Think about what a doctor goes through before they ever do a surgery and get paid. A lot. Think about the investment and the heartache. That's what trading is. Trading is so fucking stressful. There's so much heartache. I'm not going to blow any smoke over you. There's so much pain involved in it. You need a mentor or mentors. Because to do it alone via books, it's very rare that it happens. those are the people that probably end up, owning websites and come up with their stuff. But even I had a mentor. I have Paul. I have Saeed. I have people I talk to every day before I hit my consistency. You just need it. Mary Beth had me. You ask Mary Beth what trading books she's ever read, she'll be like, "Oh well, I read the Bulls on Wall Street Bootcamp, and and that's it. That's like probably the only trading book she's ever read in her life because she's my business partner. I taught her. I taught her whatever was in my brain. Saeed taught me whatever's in his brain. Paul taught me whatever's in his brain, and there it goes. This is no different than any other job. You got to go to university to do it. So we have class starting November 10th. You guys can email Mary Beth if you have any questions about it. She's always on her email. Hit her up. I'll open this up to questions. The site, you don't have to stay for the questions. There'll probably be all sorts of stuff. If you don't want to. All right. Let's open this thing up to. And guys, remember that there's probably 1,000 people in here. So let me. Man, all the Indians are just bombarding us, Saeed. No masala chai. Nope. Are we able to see everybody's questions? No. Oh boy. I'm a cowboy. Khalid's got 7 questions. Here are a few questions for you. How do you find which stocks to trade the next day? I think we went over that. How do you find when the stock is heavy? Saeed, what does heavy mean? How do you find a fat stock?
I remember that, Khalid. He asked me the same question in Twitter. Heavy means like we're looking at Amazon today, I mean, this stock is overbought, plain and simple. And, this thing should have cracked, plain and simple. It's been up for like days, and I was short on the stock, And to be honest, I made $2 like on it, but I was not happy with it. I wanted like $10, crack. Never got it, covered it flat. But heavy basically means that stock is overbought and tired, plain and simple. It's been up for days and it needs to crack because market is so strong it doesn't crack. Doesn't mean it's not crack. Maybe it will crack tomorrow. But heavy is heavy. It's overbought. It's bloated. It's tired. I don't know who's putting it up, and this is what heavy means.
Other question. This is a good question. This is like a 2-hour question, but we'll try to give you a quick one. How do we know when the trend is trading? There's a few different ways. Stock stops making higher highs, higher lows, starts making the reverse. The stock starts breaking support, stock starts breaking under moving averages, stops going up. Probably are the most basic ways, but it's a multi-hour question. Aside any other quick way to determine if the trend is changing. What are the different indicators for industry performance? I don't think there's any indicators for industry performance. Not that I've seen. I've just treated industries like stocks.
Hey guys, I mean, look, there are various kind of traders. We are mainly day traders or like 1 or 2 day swing traders. So if you're an investor, if you ask me a question about, what's the FA on this company, I'm not going to answer it, and neither does Kunal. So you're in the wrong place, plain and simple. Just to clarify it, we are short-term trader. We just trade the technical setup and chart.
Somebody asked, what is the meaning of chasing a stock? Boy, that's probably the most subjective thing in the books. Because every stock has its own range. So chasing could be some stocks, like me and Saeed, there's stocks like, say, Blue or Amazon. sometimes you chase at $1 because the range is so huge. And then there's other stocks where the range is really tight, like Twitter, which never moves $1. You chase it like 10 cents, it'd be chasing. But we're like something like blue that moves like $10, it wouldn't be chasing. The other thing is, Saeed talks about this all the time. It's like typically after like 3 or 4 big green candles, like if you buy a stock and because you think it's a breakout, it's probably not going to work. Is pre-market and after-hours trading recommended? Dude, life is so short, man. Do you really want to sit in front of the computer from 6 a.m. to 8 p.m.? I don't. I mean, I'm in front of the computer, but I got other things to do. I trade during market hours for the simple fact that I don't want to be in front of the computer that long. Not to mention, there's no action in pre-market. I've never seen any action in pre-market. So, do you ever see anything in pre-market?
No, I don't. I mean, look, I open my computer at 9 o'clock, so, 8:45. Regular trading hours is long enough. I mean, come on. Everybody has life. And I have family too, I'm not going to sit there, from 7 to 7.
The other question was, is it possible to make money off $1,700? A little bit. It depends on how much money you're looking to make. If you're looking to make $50 or $100 every few days, every day, every couple of days, yeah. If you're looking to make money out of $1,700, no, most likely you'll lose it all. Your expectations in trading are just, I think, really, really important.
Hey guys, save some money. I mean, seriously. Don't even bother trading at $700.
You can't have $1 million income without $1 million. It's just kind of how it goes. Unless you have $1 million skill. So there's 2 different things. There's your skill, and then there is your bankroll. So if you don't have $1 million skill, then you can't make $1 million. And if you don't have $1 million bankroll, you can't make $1 million. And just like if you don't have a $10,000 skill, probably not gonna make $10,000. Just like if you don't have a $10,000 bankroll, probably not gonna make $10,000. And so you got to be very, very cognizant of it. Now, like we have some students like Corey Chin. He trades a $2,500 account in our hedge fund, and he gets leverage in there, and he's not stuck with pattern day trade rules stuff because he's trading with us. And then, he made $2,000 last week, and he wired it out and paid himself and all that fun stuff. But Corey's been, in our program for well over a year, and he's been working his ass off. So he's got not $1 million skill, but he's got a $10,000 skill, even though he's only got a $2,000 account. So then it's a little bit different. But he put in a lot of work. It's not like I just gave him this boot camp and he just made all this money, right? It wasn't that was not the case. He took our boot camp, went on the simulator, did all this stuff, and it was awesome. Then he tried his first account with $2,000, and he's awful. I mean, awful. And then, the next one, he got his shit together. Hey, Stephen Tucker, man, if you had your worst day, go for it, man. I shake it off. Ken Pulvervanti, how do you determine a buy or sell using VWAP? It's totally dependent on really the setup. I mean, different setups require different rules for VWAP. There are, 20, 30 variables that can go into any trade, but same thing with VWAP. There's so many variables that could go into it. But, historically, a really bullish stock that pulls back to the VWAP that's not overbought and not deserving of a crash, that could be a potential buy spot. Dun, 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 dun. Hey, Kashik. Fucking Kashik. Always asks the most odd questions. I love this guy. Kashik, Saeed, your cousin Kashik is wondering uh, what time the stockmarketwatch.com updates all their data.
Which one? Stock? What? Which site?
What time the stockmarketwatch.com updates all their data? Just in
I
case.
don't know. I only watch them in the morning, and that's it.
Just in case you're friends with the CEO.
Yeah, I don't know. I mean, I just.
Man, what are the odds that we know the CEO of this company? Dun, 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 dun. Let's see here. Do you use level 2? I mean, I have it up just because you can't get into a stock without actually looking at, a montage. I don't use it for my analysis. Do you, Saeed?
No, I don't even have it up. Sorry.
It's just like, so for those of you guys that don't know, there's a level 3. The real question is, why don't we use level 3? If you want to use level 2, what you probably should do is get your hands on a level 3, which they won't give you. There's a reason that level 2 is free, even at like the cheapest brokers in the world.
Right.
It doesn't mean anything. I'll tell you a reason why. So, like, say Ameritrade. Ameritrade, like if you have Ameritrade account, they route their trades through NASDAQ, ARCA, maybe, and they have a couple random ones. Well, that's 4 places. There are over 200 that I can think of by name, 200 different exchanges that you can route your trades through. So Ameritrade is going to show you 4. So is your level 2 worth anything? Probably not.
It's the fantasy.
Let's see. Oh, guys, and we have we do have a contest. The people that stay in this webinar to the end, we will be announcing a boot camp prize winner. Mary Beth will be emailing everybody tomorrow on who won the free boot camp. So I'll make sure to.
So wait a minute, they have to stay till the end. Oh, great.
Yeah.
I mean, okay, never mind.
Yeah, I mean, no point in giving somebody something for free. Don't stay till the end.
Maybe Indian game, pretty sure.
Thomas Swing, what's going on, baby? Let's see. I bet Brandon Koch is going to ask me about liquidity a couple times. Brandon, where's your liquidity questions? Kashik, what about the scenario when the first and second 5-minute candle is a huge run? When would you anticipate get in? You may have to fill me in on what that means. Oh, Nate, good question. What moving averages do you use? So we use simple moving averages on our daily, which is like just the regular ones, 20, 50, 200. And then we use on the intraday 920 EMA. I use a 20 SMA, and then I use VWAP. Why I use a 20 SMA is a really long story. And Mr. Capperty, TC2000 does show pre-market data, but I don't use it. I'd rather see a gap rather than seeing all the funny stuff pre-market. Dun, dun, dun. Mr. Cafferty, do you always wait until the first 3 candles before you enter an ORV? No. Every blue moon, you call an audible. That's what life is, right? You can't script everything in life, my friend. You hope to for 90% of it. Mhm. Sebastian, is there any disadvantage of trading 5 minute chart versus 1 minute chart? Disadvantage? Yeah, there are probably some. There were times that there might be flags, like after a stock has a huge breakout, and you wouldn't see like an ad spot. So like something like an AQXP or iTech or something that has like a monstrous breakout. You probably wouldn't see like your secondary ads on a 5 minute chart at all. You would have just had to ride them up. I think that's probably the only big disadvantage. Do you have one, Saeed?
Yeah, I mean, like you said, I don't like 1 minute so principle. Too many signals. First 30 minutes I use 3 minutes, and then after 10:30 I'll switch to 5 minutes. That's work for me. I mean, if 1 minute works for you, it's good for you, I guess, but not doesn't work for me.
Hey, Mr. Gilbert, Mike Gilbert, how you doing, sir? Mike's asking, what is the stop on the ORB? So the stop on the ORB is usually just right on the top of the range. So that's why you always want to try to find a good tight range. Uh, you don't want to be too loose with it. Now, there's always an audible, when you're reading the price action. The thing about the ORBs, it should work relatively quick. And so, like, you will call an audible sometimes where, like if we got an ORB and it didn't ORB, that's like a big, big red flag. I probably wouldn't wait for like a $1 or $2 stop to hit because it would just be, an unnecessary $1,000 loss. These things, when they hit low day, and even if you're in way before, they kind of work right away. Even when I'm anticipating an ORB, if you anticipate it because you got a quick pullback short or a quick pullback buy, that sucker should be moving like instantly. If your game is a little bit off, I don't know, maybe 5 minutes, but Sai will tell you like anytime we hold a stock at the open and it's like 20 minutes and we're not actually in the money on it, we're kind of praying for rain. Like we know it's going to be a loss, and then we're just being stubborn.
Yeah, I mean, those type of needs to work right away. I mean, most of the setup that we do, they're so prime, they have to work right away. If they don't, then we're basically praying, plain and simple.
Yeah.
These are the best of the best setup, and these are meant to be work right away. Plain and simple.
John Stockdigger is asking, do we look at the fundamentals of a stock at all? We look at the news, but we don't really sit there and analyze it. Mr. Ford, how you doing, sir? Tom Ford. Um, we use opening range breakouts. Tom's asking if we use the pre-market. Do we do the opening range breakouts pre-market or when the market opens? My
No.
personal belief is just never to get in the computer pre-market and start trading. I just don't. I got things to do, man. I'm out there sitting in the sun doing something. Mr. Stockdigger is asking, what is your stop loss on a trade? 2%, 3%. Stop loss is always dependent on where the nearest level of support is. So it could be 0.1%, it could be 5%, depending on where the stock is in its range, and then where the nearest stop levels are.
Hey guys, if you're a trend trader, you cannot have a fixed percentage stop loss. That's a sucker's game, I mean, if you're trading charts, you basically have to put a stop at the lower of the range, There is no set, it has to be 3%, 4%. It doesn't work that way. It might work if you're an investor, But again, even if you're an investor, it doesn't make any sense. If the stock broke a pattern, just get out, plain and simple. whether it's 1% or 2% or 3%.
And Natalia, your question is, what does it look like short? What does what look like short? It's probably more of a secondary question of the context. Vikram, what does ORB mean? Opening range breakout or opening range breakdown? Joe Scavarelli, man. Shit, it's good to see you, bro. Natalie, your other questions, can you show the last one again? Do you know the last one of what? If you just remember, there was 1,500 people that signed up for this webinar, and they're all asking 7 to 8 questions, just like how you asked them all in a row too. So between them all, that's 9,000 questions. If any specifics you could add into your question, that would be huge in terms of just understanding what we can all do. Dun, 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 dun. Maud, how you doing? Maud's asking, how many monitors do you have? Maud, for the most part, because I'm traveling most years, so guys, I'm on the road like half the year. Half the year I'm in Florida, for beach season. And then when beach season is over, I'm going to another beach. So, I've spent half the year in St. Martin, Dominican, Costa Rica, Colombia, Brazilish type of places. So traditionally, I just trade on one laptop and then one USB monitor that I get on Amazon. You can get a third USB monitor that are only like $100 each, but you don't need too much stuff doing one. Like for me, I don't want to sit in front of a computer with like 5 monitors and then be stuck in my house for the rest of my life. Like that's not. It probably might make me a couple $100 extra, maybe. I don't know, but it's not what I want to do. And so I never try to get used to it of having all the frills of having too many monitors, because if you have a trading platform and then you're charting, how much more stuff do you really, really need? Probably not much.
I only have 2 monitors because I know what I want to trade, and that's all I trade. So I don't need more than 2 monitors.
A lot of people have asked me. A lot of people have asked me about shorts. For shorts, me and my students, most of my students, we trade inside a hedge fund called ClickFund, where we have basically not unlimited shorts, but 99.9% of stocks that you'd want to short, you can short. And that's one of the reasons we have it. You just can't, at Ameritrade, E-Trade, any regular broker, you can't short the stocks under $10 most of the time, which tend to be the shittiest stocks in the world. So those are the ones you want to short. So we trade inside ClickFund. Something similar, like Saeed probably has an account at IB Brokers. They're pretty good with shorts. Saeed always has good shorts.
Yeah, IB Broker is pretty good actually compared to all the retail broker, and it's cheaper too.
Dun, 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 dun. The program that I'm looking at, guys, are it is TC2000. I'm sorry, I had a brain fart. It's TC2000. Gregory's asking, when you sign up for the bootcamp, do you get access to the chat room? Yes, you do. And chat room, screen share, video. I'm gonna be singing and dancing my days away.
Hi guys, I'm gonna be out by the way, so good luck.
Yeah, take care, Saeed.
Okay, thanks.
Hey,
Thanks for coming, everyone.
Any advice on ORB fills when fast-moving price action? Yeah, don't chase. Yeah, guys, Bosch, Segura, yeah, we'll record this bad boy. Mark is asking, can you recommend a broker for beginners? Mark, I do not recommend any beginner trade with real money unless you're rich. If you're rich, do whatever the fuck you want. Yeah, you guys, you rich people that grew up rich, man, you have such a gift. I hope that you give some to the poor and enjoy yourselves, because Man, I'd give anything not to work 20 hours a day. It'd be awesome. Shit. Man, I'm so jealous. All I want to do is lay around drinking Mai Tais and dancing with 21-year-olds at beach bars. But we got to work. And for those of you guys that work, do not trade live money till you know for a fact you can make money. Do not do it till you know for a fact you can make money. Get on that simulator. One of the worst things I can see in this happening to people all the time is, you get excited as you read something, you learn something, and you go and you trade live before you're ready. And then what happens is you lose the money, and that money you can't get back, but that experience you can't get back because you shortcutted the experience. Before you get into all that, make sure that you're ready. Make sure that you're ready. So Mark C, if you're looking to simulate, you can use Thinkorswim, Ninja Trader, something along that end. There's a whole host of them. And then, for a broker, I think if you're day trading, you want to do a per share broker. And if you're swing trading, it probably doesn't matter as much, the commissions. Chris, when you're looking for a PR catalyst, what do you watch? Where does info come from? For me, I just use like TC2000. So, anytime I need info, any given stock, like they'll have all the info you need. Daniel Camito, your question was for long. I'm not sure if that's a declarative sentence or more of an informative sentence, but I don't know what it means. Larry, what the fuck? Larry Jensen, how you doing, bro? How long have you been using the VWAP extensively? Since I started Bulls on Wall Street, I've been using it. Ray Martez, what software I use? We have our own internal software called App Trader that's open to all my students. This beautiful piece of software over here that you see is called TC2000, which you can buy on Warden.com. Hey, Robin Cook, I will make sure I will try my best. Tom Ford, will you trade an opening trend even if you don't see your pattern? I normally won't because I won't have a way to manage my risk. Dan Fajardo, gaps most of the time always get filled. Why can't we just wait? Because it could take 3 years to get filled. Then I'm not going to have any hair by then. Hey, Bill Scott, how long have you been teaching these courses? Since 2008. I'm the man. Bill Scott, I'm the man. There's just no getting around it in terms of, there's very few people that will go and teach courses that long, and they give all students their lifetime access. When people are calling me and texting me and emailing me, they're not just students that sign up for this course. The students that I may have had 4 years ago that are trading live or trading for a living, and just like any developing person and anything, right? You always are going to have questions. Just like if you're a brain surgeon, just because you're 3 years into it, right, doesn't mean you're the world's best brain surgeon. It just means you're kind of a brain surgeon with not that much experience, but probably pretty talented. You're still going to reach out to your mentor. And so I think that's one of the awesome things, Bill, about my class is that I've had this thing going for a long time. And I'm going to be doing it, 10 years from now. But my students have lifetime access to it. They come back. I have so many people come in, and I have people like, Tim Weinkrot, and people that come in now. They bought my boot camp, years ago, and they come into a free webinar, to come and say hello. I love to see that shit. My man Dennis Barrett, He's got all these broken hands, and he's probably acting all crazy right now, all up in Michigan. But he comes in, even though he's bought by boot camp and has access to all these classes. He still comes in. Joe Scavarelli, man, I got you, bro. I'm gonna try. Kyle Soder, how do you narrow down your list of the 3 best ideas a day? I usually do it depending on probability. Um, your ideas, I personally believe ideas should always be narrowed down based on probability and then reward to risk. Kevin Ling, do you ever, start with a partial position and add to it? Yes. Ryan Dean, what's going on, buddy? Long time no see. Wesley, an ORB and quick pullback appear to be similar. What's the difference? One is a breakout on strength, and one would be a pullback. Dan, how many people in the boot camp? I probably taught, I don't know, 5,000 people over the years in the boot camp. Every given boot camp is probably 50 students or so, sometimes 70 students. Boot camp is a well-oiled machine, though. Besides me, there's Mary Beth, there's Saeed, there's Chai, there's Jordan. I have 12 employees, and they all were actually students of mine. So I live with my 3 knucklehead best friends over the years. If you ever see me in whatever Facebook or Twitter or whatever, right, you'll see like these bunch of these idiots hogging up my Facebook feed. But these are my best friends, and these are all these are all my people. These are all the people that work for me. We're all best friends. It's pretty cool. All these people, they were my students, and so I think that's cool. And so everybody's really well versed into the boot camp. There's nobody that doesn't know about trading that works at our company, and that makes it very, very unique. You talk to a customer service rep, he knows about trading. You talk to like Blake. Blake is one of our salesmen. Blake was one of my students last year. I looked at him and he's like this big superstar. He's got this big shit-eating grin every time he walks around. I go, man, that guy's a salesman, right? So I hire him. Mary Beth, 5 years ago when I saw her, she was coming out of college, and I'm like, man, she's gonna be killer. And so I hired her, and that's what I do. I am a trader. I think my biggest strength in life is going through the weeds and finding people that need a chance, but that deserve a chance, but they're gonna be superstars. I can spot. I'm wrong sometimes, but I have a good vision on spotting really, really talented people. It's just what I do. I have notebooks of it. Like when I see people, like I'm at a dinner party or wherever, I'm like, this guy knows about banking, da da da, lawyer, da da da, whatever. When I need that person, I have a relationship with them. But all those people, like, so over the years, I've hired all these people. They all had something individually that's very, very unique. And I'll tell you what. So when I interviewed all the people and I've hired all these people over the years, it's amazing because nobody ever said, I need a chance, I need a job, I want to be rich, I want to do this. Nobody ever asked about salary, about vacation, about benefits. All the people that I've ever hired, the only thing was, I want to work with you. I'll do whatever it takes. So, like Mary Beth, I paid her $200 a week. Now, Mary Beth, I pay her $250,000 a year in salary, but in the beginning, I paid her $200 a week. but she never asked me what you made, and that's what I loved about it. And then, of course, I knew she was a hustler. Hey, Tug is asking what percentage of trades are intuitive or anticipation versus price triggers. And Tug, I never use price triggers really. I find that once you have a price trigger, say you had a price trigger of 20, and you knew it was going to break out at 19. Why would you get a 20 versus 19? I think it's counterintuitive to do that because at 19 your risk is much lower. And if you have, say, 80% probability of it breaking out at 19 over 20 versus 90% chance of it breaking out at 20, why would why give up the extra dollar for 10% confirmation? Hey Aaron, how you doing? Aaron's asking like how much money I start with. Aaron, I start with $500, but then I built it up and I lost it, and I built it up and lost it. I built it up and lost it, and I believe my last account I probably started with 5,000, but I lost like 4 or 5 in between there, with small amounts. Hey Kashing's asking, how are you guys sending market orders versus limit orders? Kashing, I actually use a limit plus order, so it's like a limit order plus a couple cents above the bid, so I can get filled right away very quickly. So it's like a semi-market order. That way I can get in quick, but I won't get the really really bad fill. Hey Mark, so Mark Shaw is asking like what websites I use for charting. This is right, what you see here is TC2000. I believe it costs $100 a month. I will say that $100 a month is probably a ripoff for tools, but this is the main tool that it's the only. I mean, I don't have any personal relationship with them, but it is one of the best tools I've used ever. Eddie, I take out the cash every 2 weeks. I wire myself out the profits every 2 weeks. Daniel, how do you start your short size? If I get the perfect entry, I'm in right there, all in at once. My max share size. If I'm off, then I'll scale in a partial depending on how much my risk is up to where my pressure point is. Hey, Robin Cook, good job. Hey Yogi, how you doing? Yogi says how to find a squeeze trade and position ourselves for before the big move. A squeeze trade is simple stuff. You can go on shortsqueeze.com, Yogi, and see how many shorts are in it, or do a scan for the stocks with the most shorts. I actually don't scan for stocks with a lot of shorts. I find that they move when there's a big short interest. They tend to move a little bit haphazard. because of the random short squeezes within there. So I don't like stocks that have like 80% of the short floated unless that stock had a piece of news out and everybody was short. Then I want to pile into it. Hey, Sal, how you doing? What type of program are you, Sal Gonzalez? What type of program are you looking for? Hey, Christina, the skills that we learn are typically applied to all markets. I mean, we trade Chinese stocks and XYZ stocks. Now, I just do them on the American exchange, but we use Chinese ADRs, Indian ADRs that trade over here. Matt Murphy, I do see your question. What's up? Aditya, how do you trade SPY? You trade SPY depending on the patterns that you think are going to happen in the market, and you use the SPY ETF. Hey, Cody, does Trade Ideas or TC 2000 show whether stocks are easy to borrow? Nope. That's a brokerage issue. Hey, Cecil, I use daily charts and 5-minute charts. Eric Flox, execution number could be just the number of times it took to get filled. Say you had 5,000 shares. It could take 10 minutes to get filled, and they could fill it 100 times, and it could be 60 executions, even though you put in one order. But you only get charged for the one. Tom, do you use VWAP as a form of support and resistance? Yeah, I do. Nick Wilder, I look at my charts. My charts when I'm trading are more set up like this. Zahid, I don't know anything about candlestick patterns. Not my particular thing. The thing, guys, is if you're looking at price patterns and you know the price of a stock, then you'll know what the candle is going to look like. So the candle is kind of the tail end of things. Hey, Seraphin, is options available in ClickFund? No, not at the moment. I don't know too many options traders. Any good ones? Mao, do you use any Fibonacci retracements? Nope. Matt Murphy, have you used the TC2000 simulator? Nope. Hey, Jeremy Tonstead, let me ask you something. Do I look like a mathematician slash technician? Tell Kevin what you can't find and tell him to fix it. There you go, buddy. And what's going on in Arizona these days? Do you believe in blue chip stocks? I guess it depends on what your definition of blue chip stocks are. Hey, Dan Cafferty, man, appreciate it, bro. You the man, bro. You the man. Kichi, Kichi. Kichi, Kichi, yeah, 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 yeah. Do you use MACD stochastics, RSI? I do use stochastics. MACD stochastics, RSI are almost all the same thing, so I just use stochastics. Hey, Kashik, this last question you asked at 10:12. Is there any way you could condense that into a readable format? How do you deal with trading stress and FOMO? Masturbation. Just kidding. I'm just kidding. FOMO is one of those things you should always be asking yourself, am I trading a stock pattern or am I trading my P&L? In terms of trading stress, I have zero trading stress. And the reason for that is that if you've done everything you can to prepare, if your preparation is so on point, if you have given everything you've got, when the lights turn on and you're trading, you don't have any stress. You are just executing your plan. FOMO now, fear of missing out, is a little bit different. You're going to have to do some self-talk there and ask yourself, am I trading my P&L because I have a fear of missing out, or am I trading a stock setup that's worth my emotional and mental and financial capital? Hey, Tom, for the ORBs, I'm just looking at the exact same ORBs, in the charts that we talked about. Jennifer Lawrence. Jennifer Lawrence, by the way, Mary Beth's favorite movies are those Hunger Games movies. So that might be a question you ask her. But yeah, she does teach some of the classes. Hey, Benny, Christy, if you want your wife to live in a house full of dudes, send her over. Hey, by the way, Ben, when I go through Christy's trades, I mean, she's like a pro. She's very good. Your wife actually knows what she's doing. She's good. Now, the question's always going to be, the difference between being the simulator and live is very different, because can you handle following through with what your brain knows you're supposed to do when it's live because of money pressures? You have money pressures in your personal life. You have debt. You have things that are coming up. Do you have to make money? The day you have to do anything, and the gun's to your head, nobody makes a good decision. So, those are the things that everybody has to work on. So, Christy's like a world-class trader in terms of her knowledge. Now it's going to be to transition her to the next step, which she's more than capable for. A very smart woman. Hey, Joe, we went through a whole host of ORB long setups, in the webinar. I do more ORB longs than I ever do shorts. Hey, Mike Zamore, I don't have a percentage of stop losses. I put my stops under support. Ernesto, there is high trading volume on low floats all the time. I've seen stocks with 2-3 million share float and 50 million shares in volume. Maud, I'm typically at 65 to 70. What about the gap up in the first 5 minutes of the market open where you don't have time to see 3 candles? I wait. I wait for the pullback or the ORB. Hey, Sebastian, how you doing? Let me see. Hey. Good. So, you have a breakout right at 20. So, this stock gapping up above that resistance is just monstrous, right? So you had like this flag. Now it's breaking out of that. I think that this thing, if it can hold over 20 is like the key level. That's give me a nice move. I don't know the stock's up a lot the last few weeks, but that 20 is the key level. It's going to either fade there or go there. Hey, Kim Tran, what did I say is so boring? Hey, Natalia, what are you saying sorry about? I'm more just asking about what your questions are. Like right now, you're asking, I meant when it breaks out. You're not telling me what you meant and what breaks out and what breaks down. So I don't know. I don't know how to answer you because I don't know your full question. Is all I was saying. Hey Tug, I use hard stops if it's really liquid, but most of the time I use mental stops. Hey Steve, yes, I use specific setups. Stephen Tucker, I use specific setups for the open and the specific setups for the middle of the day. One, I don't have any particular tickers for tomorrow. I was trading the whole day. I was preparing for the webinar, and I've been at the computer since about 5:30 in the morning. Hey Zahid, how you doing? In boot camp, usually we have the students, they take a few patterns that speak to them, and then they test those on the simulator, and then they start adding to them as they build expertise. No student will ever go in and try to trade every pattern. What we have them do is kind of narrow down where their focus is. Are they day traders, swing traders, and those type of things, and then come in and pick patterns that fit what they want to do. Hey John, how you doing? How do you explain or justify what happened in ADPN? How come people still buying it even after very bad newsletter and 3 legal companies suing it? ADPN was one of your setups, by the way. John, I have not called a single trade in ADPN in my chat room. I don't even know if I've ever done it. Just because something's on our watch list does not mean that we tried it. But I have no clue anything about the stock or what the newsletters are, the legals are, or whatever. I mean, you get oversold. Sometimes stocks bounce. It's called dead cat bounce. I mean, I don't think there's anything too much in it. The liquidity in this stock is just not enough to trade. For me, I like liquid stocks. Do you recommend subscribing to Squawk Box? I personally have never heard of Squawk Box. But also, I don't watch CNBC. Catherine Brown, where have you been? You know what? You owe me an email. Where have you been? Yeah, Jose, no problem. No problem, Travis. Hey, Eddie, man, I was just in Puerto Rico in June or July. Hey, Mr. Marcellin, yeah, in the business plans, we kind of discuss all the type of things that we need to go into. Hey, Maud, your question is, so what do you do? What do you show on each? Show what on each? I guess it would be my question to you. What do you show on each? Gun, show. Amon, so what do you do when you feel like you're in a trading slump? Usually when you're in a trading slump, you usually want to go back to your old faithfuls, like the setups that you always win on. Usually when you're in a trading slump, you're taking like every single trade that you've ever heard of. Somebody throws out a trade, you take it. You think of a trade, you take it. This guy takes a trade, you take it. Usually when you're trading slump, narrowing it back down to your old faithful go-to setups and just keep doing it till you start getting back on a run will be really helpful. Hey, Steven. Steven's asking, what is the best solution to inconsistent Wi-Fi? So, for those of you guys that don't know me, I travel 6 months of the year. So I spent a month in Costa Rica last year, a month in the Dominican, a month in St. Martin, Key West. Boy, we were all over the place this year. I don't even know where else. Colombia. I never had any good internet anywhere, and I didn't really do anything about it. See, in trading, you don't need too much bandwidth. You get 1 megabyte per second. It'll be enough to run your trading platforms. You may not be able to run any scanners. So what you got to do is do your homework like way into the night, and then you could run some low latency type of stuff where you don't have to have too much bandwidth. Like this quote tracker is like freaking 15 years old. It don't take up any bandwidth. I just won't run any scans. I'll just do all my homework before. It actually makes me make more money, Steven, because I don't have to sit there and overtrade. I'm just gonna take like a handful of trades. Paul Pruder, how many open alerts do you typically have? 0. I don't set any alerts. Hey, Paul, good to see you, bro. So, Natalie, I'm not sure I understand your question. I meant ATVI. What did you mean about ATVI? J Trades. No, I don't use a 4G hotspot. They don't have 4G in the places I go to. I'm traveling in the fucking jungle. Hey, Daniel, it's good, man. You're not rich, you're not poor. That's where everybody starts out. Hey, guys, no matter what your circumstances in life, know this. Every day trader I've ever met that's really successful, they were all poor or somewhat poor. It's very few people start off with, their parents' money, $30,000, $40,000. Most people start off with a small amount of money and then they have jobs. You got to go out and work. And they add money to their trading accounts. They start off with $5,000 and then they work their ass off. They spend no money. And then they add to it. And they add to it. I lived that with my parents till I was 30 years old saving money. So I could have tons of money in my trading account. So then when I want to quit my job, guess what I did? I quit my job. That's how it goes. There is no shortcut to that. Now, granted, at the time I was paying the mortgage, but I was still with it. Hey, KC, what do you mean by level 1 and 2? Hey, Cecil, I don't have any brokers that I recommend. I have my own fund that I trade in. I wouldn't trust any retail broker with my own money. But if I was going to, probably, IB broker, speed trader. Hey, AJ, what is VWAP? VWAP, it means volume weighted average price. And I use it as two different things. A line in the sand type of way indicator, and then also like a support and resistance way. And hey, Jamie J Trades, sometimes I do have like a uncut or what's it called, open source, unlocked Wi-Fi cards. If we're in a weird area, we can go. Dude, the Wi-Fi or cell phone service is way cheaper in foreign countries than it ever is in the U.S. Just like American drug. You ever go to Costa Rica? You want like, say like Lipitor or some cholesterol drug that costs you like $500 a month in the U.S. You get in Costa Rica, it'll be like $20. And it'll be the legit one because there's no drug companies there, so they don't try to mark it up there. Hey, Vikram, you bet, baby. Whatever you want, we'll get it for you. Tom Ford, what simulator can I use? You use Ninja Trader, Thinkorswim, Interactive Brokers. Everybody has a trading simulator. Jose Centennial, I will make sure. We're going to take everybody that stayed to the end. Even TC2000 has a trading simulator. Guys, Zahid, boot camp starts at 8 p.m. Sunday, 8 p.m. Eastern. Sundays, Tuesdays, Wednesdays, Thursdays. My man. Hey, Bill Raj. I'm not sure who D4 Trade is, but I use 90 million 5-minute charts. Hey, Bill. I'm not that young. Paul Singh taught me how to trade. Joey Pierce in the house. I feel like you just creeped in at the end, Joey Pierce. Hey, Sherry. Oh my gosh, Sherry White, how you doing, doll? Hey, hugs. Miss you. Hey, Tom. Tom's asking like, what did I do before I was trading? I actually worked as a headhunter, so like doing recruiting. I was a phone business. I was in office on the phones, like burning up the phones, and that's what I did. I did that for years out of college. I was a man in it too. Hey, Joey. When I feel more comfortable, Joey's asking, do I feel more comfortable in long or short? I feel more comfortable depending on wherever I'm winning it. That's usually what makes me feel comfortable, and also the market. Sometimes the market is just in such a big bull run. It's really hard to short stuff, and vice versa. Hey, Jose, man, life is short. You got time to do anything you want to do. Hey, Natalia, why do some teachers say that if everyone knows the technical patterns, then it loses efficacy? Because most traders most traders and teachers don't know anything about anything, right? What makes them experts in anything? Most people just use canned responses for everything. I'll tell you what, in terms of canned responses for success, canned responses for exercise, almost everything that you hear that's a canned response that you heard over and over, most of the time it's actually not true. And I tend to put a variation on almost every pattern that I trade, even if it's a historically well-known pattern. I always put my own twist on it. But even then, most of the stuff we trade was around 1,000 years ago. Hey, Benjamin, any tips letting winners run? Sure, write out a trade plan before you take the trade, and kind of an idea, put it in your trade plan where you think you could sell or where you should sell. That may help you. Hey, Wesley Richardson, what's going on? Hey, Sofiani, how you doing? Question is, with a 10K account size, which position size would we start with? You could be in really small, $2,000, or you could be in $30,000 or $40,000. Depending on the setup and also your risk. Like for example, say you wanted to risk $500 on a day trade. So if your setup is only the stop loss only 10 cents away, you would have 5,000 shares of it, even if it's a $10 stop. If it was 20 cents away, you'd have 2,500 shares. And if it was 50 cents away, you'd have 1,000 shares. And so you're always going to size it a little bit accordingly. And then you add in the probability factor of how well you trade those trades. Now, you never want to hold any leverage probably overnight. Maybe a little bit, if you're really good. But, you never want to be in big leverage overnight. It's a quick way to blow up your account because when you do that, you owe the money if something bad happens. Hey Tom, yeah, I'll probably post on YouTube. Who's the youngest out of your employees? Boy, we've had, I think Dennis is like 19 or 20. Most of my guys, I'm the oldest one, so most of my guys are in their 20s. And most of them came to me, in college or a little bit before. I like to take them when they got potential. Israel, when a position goes against you, do you ever average down? I will scale into a position. Say I want double down, but if I say I was planning on getting 10,000, I only had 2,000 because I was taking a tester, then I would add in more as it goes down, but I would never double down. Yeah, John Stock Digger. I use Quote Tracker to look at some of my stuff. Hey Bosch's question: do you prefer big candles or small candles at the open? It just depends on the setup. Hey Sal, we use TC 2000. We use AppTrade for most of our stuff. Hey, thanks Daniel, appreciate it. Hey Tom, what I mean by short squeeze is essentially just a stock that has a lot of shorts in it that's breaking out. Hey, Paul Pruder, trade ideas, you can pretty much make a scan to anything, depending on if you're good at math. You can make literally anything, and they have even a cool odds maker thing where you can say, I'm going to put in like 10,000, 20,000, 50,000 hypothetical money, and then you can start back testing it. It'll be like if you did this scan and took the trade for every day for 5 years, how much money you'd make. I mean, they can do all sorts of cool shit. Classes start at 8 p.m. Hey, Jose, man, I look forward to it. Hey, David, how important is checking sector ETF to choose a stock to trade? It depends on the type of market, It depends on the sectors in play. Hey, Paul. Paul's asking whatever I did with the brain research with Anand Sanghavi. You know what? The doctor of the brain facility sent me like a 50-page report of what was going on in my brain and how it all worked and how it tied into trading. And it was actually so long that I didn't open it because it was too daunting. I'm never going to. I told the doctor too, I'm like, can you give me a Cliff Notes thing? And he's like, well, I just have this template of all these things that we tested you on. So I'll send it in a PDF. And the fucking thing was so long. I mean, I told him 1,000 times there's not even a single chance I would read it. And when I saw it, I saw how many pages it was. Guess what I did? I didn't read it. I don't like reading that type of stuff. Hey, Maud. Usually I call out my trades as I'm doing it. Hey, Jeremy, I'm good here in now. Hey, Dan, yeah, I've got a whole host of different stocks that I watch depending on the market. They're on our website. You can probably just put in the search box. I got in my bootcamp Google, my bootcamp community page also. I just uploaded a new one. Anthony, why don't you trade options? Too confusing. The simplest explanation. It's almost like me asking you, why don't you commit brain surgery? It's fucking hard. Robin, what do you think Apple's going to do tomorrow? I have no clue. Guys, you can never predict what's going to happen the next day at night. I mean, you trade setups. You have a reasonable deduction of what can happen over the next few days, and then you start aligning it on smaller term time frames, but you don't know. Everything's a guess. Anybody else got any questions? Do you use hotkeys? No. I could, but I don't. I'm lazy. Hey, Paul, my interns are all retards. They'll never digest it. I got a whole team of people with third grade reading levels. I like street smart people that hustle. But none of my people got any book smarts. Actually, most of our employees I don't even know. We have like 3 that didn't even graduate high school. But they're smart. Kind of. Shrevon, this is not the longest webinar by far. We go till we go. Hey, Wesley, we go over the trade recaps right after the market close. They're all recorded too, so you can rewatch them. Hey, Dan, after a breakout, you're in the green. How do you know when to sell partial? It depends on your reasons to sell list. Every trader must come up with a reasons to sell list of why they would get out of a stock when it starts going in their favor. Depending on the style that they trade and the parameters that they face. Folks, y'all excited or what? This shit is awesome. Now, let me tell you something. This is the hardest stuff that I've ever done. Trading make you bald. It'll make you fat. It'll make you crazy. But this is the funnest thing in the history of the world. Like right now, the only reason I'm even on this webinar this late is because I know I'm about to wake up in like 7 o'clock. I'm about to wake up in about 4.5 hours and get studying for my trading again. Like I know it's coming up in just a handful of hours. So I'm pumped. I'm pumped because this is the hottest game in town. Look at this. I am just an old man with no hair trying to make $1. And that is what makes this awesome because I can look like a big idiot and just wear hats and tank tops all day, no matter what my age is. But I work for myself. I'm sitting here we're in Tampa right now, visiting some friends and some students, and that's what makes this thing awesome. It's hard. I'll tell you what, it's hard. But you can do it. You can do it. And that's for sure. This is the baddest game in town because you got nobody's going to tell you. So like when I was working, there's all these office politics around. Like this person did this person bang, this person, whatever, right? When you're trading on your own, it's just up to you. You're going to lose. Sometimes you're going to suck. But at least it's your own fault. And I can live with that. I can live with it if it's... I don't mind putting my family, my friends, and everybody else, their futures at risk if it's on me. But I don't want to do it on somebody else. Do you live in Tampa, Florida? No, I don't. I actually came down here to visit some of my students. I don't live in Tampa. I live in Destin, Florida. Tampa's actually 8 hours away. I got a lot of students over here, so I had to come and make the rounds. I got a whole host of students coming over tomorrow to trade with me. So, Nilesh, do you go long or short on gappers? And Nilesh, you got to dig back through these slides that we were just talking about, man. I just gave you all the setups. Damn Indians. You bet, guys. Everybody's welcome to come see me in Florida, as long as I'm there. I do travel a good chunk of the year, so I'm hit or miss. Hey, Natalia, you could use a Trader View or Stock Log. Those are probably two good ones to kind of keep track of things. Hey, Paul, man, I missed you, man. I'm glad that you're still in the game. Anybody else going once? Are there some stocks only exclusive to your broker? Nope. Hey, Daniel, man, you have to track me down. I have no clue where Jackson's Bistro is. I haven't even left the house in 3 days. Is chat open to join? Yes, you can come in the chat anytime you want. Hey, Dan Cafferty, the line in the sand depends on the range of the stock. It could be, if the range is big, then I have to give more room. If the range is small, then I'm very tight. And guys, don't be lazy. Think about the website that I own. It's called Bulls on Wall Street. So, probably a lot of things that you need to find are going to be on Bulls on Wall Street. Jose, don't be so fucking lazy. How can I join your chat? Well, probably you want to go to the website where the chat is held, and you will find out. Hey, James, after the boot camp is over, 3 months, I'll take it case by case, but if somebody's just falling behind, we'll add, some chat time to it. But all our traders that go live and they trade in our fund, they get free chat access. Hey, Jay, probably about. I have quite a few patterns I trade at the open. I mean, I have contingencies for anything. That's one of the things about what I do in trade. I have contingency for everything. All right, folks, going once. Going twice. Sold! Adios, muchachos. David, Traders Daily. I'm always hiring, baby, but I never met anybody that does what I like to do, which is I've never hired anybody because I was hired. I hired people because I ran into people that were amazing, and then they found me. No, Maribeth told me to do tomorrow. Guys, the winner will be emailed. Everybody will be emailed the winner tomorrow. Mary Beth will be doing it. I'm sure Foos does use hotkeys. He also has the herpes simplex virus. Just kidding. He's my best friend. You can tell him I said that. I love him, man. He is a man. He really is. Oh, shit. I love you guys. Peace. Maserati suck. You know what a Maserati is? It's like a floating couch. I'm a Porsche man. I'll never cheat on my baby. I'm a Porsche man. Dun-dun-dun, dun-dun-dun.